Question 1. Mr. Ramirez is a resident of New York and is considering purchasing a long-term care insurance policy. He is concerned about the potential for needing nursing home care in the future. According to New York State regulations, which of the following statements is most accurate regarding long-term care insurance policies? A. Long-term care insurance policies in New York are mandated by the state and all residents must purchase one. B. Long-term care insurance policies in New York must offer benefits that comply with minimum standards set by the New York State Department of Financial Services, NYDFS. C. Only residents over the age of 65 can purchase long-term care insurance in New York. D. Long-term care insurance policies in New York are not regulated by the state. The correct answer is B. Long-term care insurance policies in New York must offer benefits that comply with minimum standards set by the New York State Department of Financial Services, NYDFS. In New York, long-term care insurance policies are not mandatory, but they are regulated by the NYDFS. This means that policies must meet certain minimum standards, such as covering a specific range of services and providing clear information about benefits and exclusions. Option A is incorrect, as long-term care insurance is optional. Option C is incorrect, as there is no age restriction for purchasing long-term care insurance in New York. Option D is incorrect, as NYDFS regulates long-term care insurance policies. Question 2. Ms. Lee is a life insurance agent licensed in New York. A client asks her about the difference between a guaranteed issue life insurance policy and a graded benefit life insurance policy. Which of the following is the best explanation for Ms. Lee to provide? A. Guaranteed issue life insurance policies offer a death benefit that increases over time, while graded benefit life insurance policies offer a level death benefit. B. Guaranteed issue life insurance policies are available to everyone regardless of health, while graded benefit life insurance policies are only available to healthy individuals. C. Guaranteed issue life insurance policies have a lower premium than graded benefit life insurance policies. D. Guaranteed issue life insurance policies are not available in New York, while graded benefit life insurance policies are. The correct answer is B. Guaranteed issue life insurance policies are available to everyone regardless of health, while graded benefit life insurance policies are only available to healthy individuals. Guaranteed issue life insurance policies in New York are available to most individuals regardless of their health status, with limitations on face amount and coverage period. Graded benefit life insurance policies, on the other hand, typically have lower death benefits in the early years of the policy, which gradually increase over time. Option A is incorrect, as graded benefit life insurance benefits increase over time. Option C may not always be true, and premium can vary depending on the specific policy details. Option D is incorrect, as both policy types are available in New York. Question 3. An insurance company is developing a new health insurance policy that will be marketed to individuals in New York. The policy will cover mental health services. According to New York State mental health parity law, what requirements must the insurance company consider when designing the benefits for mental health services? A. The annual or lifetime dollar limits for mental health benefits must be equal to the annual or lifetime dollar limits for all other covered benefits under the policy. B. The company can deny coverage for mental health conditions that are not considered medically necessary. C. The network of providers for mental health services can be limited compared to the network for physical health services. D. The company is not required to cover mental health services under the policy. Question 4. Mrs. Rodriguez is a health insurance agent licensed in New York and is explaining Medicare supplement insurance policies to a client. Which of the following statements is most accurate regarding Medicare supplement insurance policies in New York? A. Medicare supplement insurance policies are offered directly by the federal government. B. Medicare supplement insurance policies can duplicate the benefits already covered by Medicare. C. There are no restrictions on the benefits that Medicare supplement insurance policies can offer. D. All Medicare beneficiaries in New York are required to purchase a Medicare supplement insurance policy. The correct answer is D. All Medicare beneficiaries in New York are required to purchase a Medicare supplement insurance policy. Medicare supplement insurance policies, also known as Medigap plans, are sold by private insurance companies and are designed to help fill the gaps in original Medicare coverage, such as deductibles, coinsurance, and copays. It's important to note that these policies cannot duplicate existing Medicare benefits. Question 5. New York State requires life insurance companies to deliver a replacement life insurance disclosure form to an applicant before replacing an existing policy. What is the primary purpose of this disclosure form? A. To inform the applicant about the different types of life insurance products available. B. To highlight the benefits and features of the new life insurance policy being considered. C. To explain the potential risks and disadvantages of replacing an existing life insurance policy. D. To obtain the applicant's signature on the application for the new life insurance policy. The correct answer is C. To explain the potential risks and disadvantages of replacing an existing life insurance policy. The replacement life insurance disclosure form mandated by New York State serves to inform the applicant about the potential consequences of replacing an existing life insurance policy. This includes outlining any potential loss of benefits, such as lower premiums or guaranteed insurability, associated with surrendering the existing policy. Question 6. Mr. Chen is a resident of New York and is considering purchasing a disability income insurance policy. He is concerned about the financial impact if he becomes disabled and unable to work. According to New York State regulations, which of the following statements is least accurate regarding disability income insurance policies? A. Disability income insurance policies typically pay a benefit if the insured becomes disabled due to illness or accident. B. There is a waiting period before benefits begin under most disability income insurance policies in New York. C. The benefit amount under a disability income insurance policy is typically a fixed dollar amount. D. Disability income insurance policies are regulated by the New York State Department of Financial Services, NYDFS. The correct answer is C. The benefit amount under a disability income insurance policy is typically a fixed dollar amount. Disability income insurance policies typically pay a percentage of the insured's pre-disability income, not a fixed dollar amount. The specific percentage is determined by the policy details chosen by the applicant. Question 7. A life insurance applicant in New York undergoes a medical underwriting process. What is the primary purpose of medical underwriting in life insurance? A. To determine the applicant's eligibility for coverage based on their health status. B. To assign the applicant a specific life insurance agent for their policy. C. To calculate the exact premium amount the applicant will pay. D. To educate the applicant about the benefits and features of the life insurance policy. The correct answer is A. To determine the applicant's eligibility for coverage based on their health status. Medical underwriting is the process used by life insurance companies to assess the applicant's health risk. Based on this assessment, the insurer determines whether to offer coverage, decline coverage, or offer coverage with a modified premium amount. Question 8. New York State follows specific regulations regarding agent compensation for accident and health insurance policies. Which of the following statements is most accurate regarding agent compensation for accident and health insurance in New York? A. Agents can only receive a commission based on a fixed percentage of the premium amount. B. Agents cannot receive any compensation for selling accident and health insurance policies. C. There are no restrictions on how agents can be compensated for selling accident and health insurance. D. New York State mandates a minimum commission rate for accident and health insurance policies. The correct answer is A. Agents can only receive a commission based on a fixed percentage of the premium amount. In New York, agent compensation for accident and health insurance is subject to limitations. Agents typically receive a commission based on a percentage of the premium, but this percentage is capped by regulations. Question 9. Ms. Garcia is a resident of New York and is considering purchasing a long-term care insurance policy. She is concerned about the potential for needing nursing home care in the future. New York State mandates specific consumer protection requirements for long-term care insurance policies. Which of the following is not a mandated consumer protection for long-term care insurance in New York? A. The policy must offer a guaranteed issue option for individuals who meet certain eligibility criteria. B. The policy must provide a clear and concise explanation of benefits, exclusions, and limitations. C. The policy must allow the policyholder to cancel the policy and receive a full refund of premiums within a specific period. D. The policy must offer inflation protection benefits to help keep pace with rising healthcare costs. The correct answer is A. The policy must offer a guaranteed issue option for individuals who meet certain eligibility criteria. Guaranteed issue options are not mandated for long-term care insurance in New York. However, New York State requires long-term care insurance policies to meet specific consumer protection standards. This includes providing clear information about the policy, offering a free look period for cancellation with a full refund, and in some cases, inflation protection benefits. Question 10. An insurance company is developing a new critical illness insurance policy to be sold in New York. Which of the following statements is least accurate regarding critical illness insurance policies? A. Critical illness insurance policies typically pay a lump sum benefit upon diagnosis of a covered critical illness. B. Critical illness insurance can be used to help cover the costs associated with treatment for a critical illness. C. Benefits from critical illness insurance policies are typically exempt from state income taxes in New York. D. Critical illness insurance policies are a type of long-term care insurance. The correct answer is D. Critical illness insurance policies are a type of long-term care insurance. Critical illness insurance and long-term care insurance are separate products. Critical illness insurance pays a benefit upon diagnosis of a covered critical illness, while long-term care insurance helps cover the costs of long-term care services. Question 11. New York State requires life insurance agents to complete continuing education courses to maintain their licenses. What is the primary purpose of this continuing education requirement? A. To update agents on the latest marketing techniques for selling life insurance products. B. To ensure that agents stay current with industry knowledge and regulations. C. To promote specific life insurance companies and their products to agents. D. To evaluate the sales performance of agents and identify areas for improvement. The correct answer is B. To ensure that agents stay current with industry knowledge and regulations. Continuing education courses for life insurance agents in New York are designed to ensure agents maintain their knowledge and understanding of life insurance products, relevant laws and regulations, and ethical practices. This helps to protect consumers and ensure they receive accurate information and professional service. Question 12. Ms. Davis is a resident of New York and is considering purchasing a health insurance policy. She is concerned about the out-of-pocket costs associated with healthcare. According to New York State regulations, which of the following statements is most accurate regarding out-of-pocket costs in health insurance plans? A. Health insurance plans in New York are prohibited from having any out-of-pocket costs for the policyholder. B. There is a maximum limit on the total amount of out-of-pocket costs a policyholder can incur in a calendar year under most health insurance plans in New York. C. Health insurance plans can deny coverage for any healthcare service that would result in an out-of-pocket cost for the policyholder. D. Out-of-pocket costs are not regulated by New York State and are determined solely by the insurance company. The correct answer is B. There is a maximum limit on the total amount of out-of-pocket costs a policyholder can incur in a calendar year under most health insurance plans in New York. New York State mandates maximum out-of-pocket limits for certain types of health insurance plans. This helps protect consumers from excessive healthcare costs. Question 13. Mr. Ramirez is a resident of New York and is considering purchasing a long-term care insurance policy. He is concerned about the potential for needing care in a facility in the future. According to New York State regulations, which of the following benefits is guaranteed to be included in all long-term care insurance policies sold in the state? A. Home health care services. B. Hospice care services. C. Non-institutional care services. D. Hospitalization following a long-term care stay. The correct answer is C. Non-institutional care services. New York State mandates specific benefits to be included in all guaranteed long-term care insurance policies under Insurance Law Section 4303. One of these guaranteed benefits is coverage for non-institutional care services, which can include assistance with daily living activities like bathing, dressing, and meal preparation in the policyholder's home or community setting. While some policies may offer home health care or hospitalization benefits following a long-term care stay, these are not guaranteed inclusions mandated by the state. Hospice care is typically focused on end-of-life comfort and may not be covered by all long-term care insurance policies. Question 14. Ms. Lee is a life insurance agent licensed in New York. A client inquires about purchasing a universal life insurance policy. Which of the following statements is most accurate regarding how universal life insurance premiums work in New York? A. Premiums are fixed for the entire policy term. B. Premiums can be adjusted based on the policyholder's age and health. C. A minimum premium payment is required by law in New York. D. All premiums paid go directly towards the death benefit. The correct answer is C. A minimum premium payment is required by law in New York. New York Insurance Law Section 42221 mandates that all universal life insurance policies sold in the state require a minimum premium payment. This minimum premium helps ensure there are sufficient funds to cover the policy's administrative expenses and maintain the death benefit over time. While premiums may be flexible and adjustable based on factors like the policyholder's age and health, or the desired death benefit amount, there is a minimum threshold that must be met according to state regulations. Question 15. An agent is explaining Medicare supplement insurance options to a client in New York. The client asks about the process for filing a claim with their Medicare supplement plan. According to New York regulations, which of the following statements is most likely true regarding how a claim is filed with a Medicare supplement insurer in New York? A. The client must submit the claim directly to Medicare first. B. The healthcare provider can submit the claim electronically to the insurer. C. The client needs a referral from their primary care physician before filing a claim. D. Only claims submitted on paper forms are accepted by New York Medicare supplement insurers. The correct answer is B. The healthcare provider can submit the claim electronically to the insurer. New York State encourages the electronic submission of claims for healthcare services covered by Medicare supplement insurance. This allows for faster processing and reduces the risk of errors. While some healthcare providers may still require paper claim forms, many can submit claims electronically directly to the insurance company on the client's behalf. Question 16. Ms. Garcia is a health insurance agent in New York and is explaining the concept of pre-existing conditions to a prospective client. According to New York state law under the Affordable Care Act, health insurance issuers cannot deny coverage or charge higher premiums based on a policyholder's A. Age. B. Gender. C. Occupation. D. Pre-existing health condition. The correct answer is D. Pre-existing health condition. The ACA's guaranteed issue provision prohibits health insurance issuers in New York from denying coverage or charging higher premiums based on an individual's health status, including pre-existing conditions. This provision ensures access to affordable health insurance for people with pre-existing medical conditions. Question 17. Mr. Khan is a resident of New York and is considering purchasing a disability income insurance policy. He is concerned about the potential for losing income due to illness or injury. New York State requires disability income insurance policies to include which of the following provisions? A. Guaranteed lifetime benefits regardless of the cause of disability. B. Benefits that begin immediately after a disability event. C. An elimination period before benefits commence. D. A waiver of premium payments while disabled. The correct answer is C. An elimination period before benefits commence. New York Insurance Law Section 3-104 requires all individual disability income insurance policies to include an elimination period. This is a waiting period between the onset of a disability and when benefit payments begin. The elimination period can vary depending on the policy but is typically 30, 60, or 90 days. Question 18. An agent is explaining critical illness insurance to a client in New York. The client inquires about the benefits offered by these policies. According to New York regulations, critical illness insurance policies are designed to pay benefits upon diagnosis of which of the following? A. Any chronic medical condition. B. A specific list of critical illnesses outlined in the policy. C. Hospitalization exceeding a certain number of days. D. Disability lasting for more than a year. The correct answer is B. A specific list of critical illnesses outlined in the policy. Critical illness insurance policies in New York are designed to provide a lump sum payment upon diagnosis of a critical illness. This list of covered illnesses is clearly defined in the policy and typically includes conditions like cancer, heart attack, stroke, or organ failure. Question 19. A client inquires about purchasing a group health insurance policy from Ms. Davis, a licensed agent in New York. Which of the following statements is most accurate regarding eligibility for a group health insurance plan in New York? A. Only employees of large corporations can participate in group health plans. B. Individuals can purchase group health insurance directly from an insurer. C. Membership in a professional association is required to qualify for a group plan. D. Group health plans are typically offered by employers or associations. The correct answer is D. Group health plans are typically offered by employers or associations. Group health insurance plans in New York are typically employer-sponsored or offered through associations like professional organizations, unions, or religious groups. These plans can provide affordable health coverage to a group of people with similar employment or membership status. Question 20. Mr. Hernandez is a resident of New York and is considering purchasing a long-term care insurance policy. He is concerned about the potential cost of care in the future. New York State regulations require long-term care insurers to offer policyholders the option to purchase which of the following inflation protection features? A. A fixed annual increase in the benefit amount. B. A benefit pool that adjusts for inflation over time. C. A guaranteed waiver of premium payments after a claim. D. Coverage for additional services not included in the base policy. The correct answer is A. A fixed annual increase in the benefit amount. New York Insurance Law Section 43333 mandates that long-term care insurers in the state offer policyholders the option to purchase inflation protection. This inflation protection typically comes in the form of a fixed annual increase in the benefit amount. This helps ensure the policy's benefits keep pace with rising healthcare costs over time. Question 21. An agent is explaining replacement rules for life insurance policies to a client in New York. The client inquires about the grace period for paying premiums on their existing life insurance policy. According to New York regulations, the grace period for paying a life insurance premium is typically A. 10 days from the due date. B. 30 days from the due date. C. 1 month from the due date, can vary by policy. D. 60 days from the due date, but can be shorter depending on the policy. The correct answer is B. 30 days from the due date. New York Insurance Law Section 332 establishes a minimum grace period of 30 days for paying a life insurance premium after the due date. During this grace period, the policy remains in force, and the policyholder can avoid a lapse by paying the missed premium along with any applicable interest charges. Question 22. Ms. Chen, a licensed accident and health insurance agent in New York, is explaining Medicare Advantage plans to a client. Which of the following statements is false regarding Medicare Advantage plans in New York? A. Medicare Advantage plans are offered by private insurance companies approved by Medicare. B. Medicare Advantage plans typically cover all the benefits included in Original Medicare, Parts A and B. C. Enrollment in a Medicare Advantage plan replaces traditional Medicare coverage. D. Medicare Advantage plans may offer additional benefits not covered by Original Medicare. The correct answer is B. Medicare Advantage plans typically cover all the benefits included in Original Medicare, Parts A and B. Medicare Advantage plans are not guaranteed to cover all benefits included in Original Medicare, Parts A and B. While some Advantage plans offer comprehensive coverage that includes Parts A and B benefits, others may have specific limitations or require additional out-of-pocket costs for certain services covered under Original Medicare. Question 23. Mr. Lopez is a resident of New York and is considering purchasing a cancer insurance policy. He wants to understand the benefits offered by these policies. New York state regulations require cancer insurance policies to cover which of the following expenses? A. The cost of routine doctor visits and checkups. B. Lost wages due to a cancer diagnosis. C. Treatment costs associated with a covered cancer diagnosis. D. Transportation costs to and from medical appointments. The correct answer is C. Treatment costs associated with a covered cancer diagnosis. New York Insurance Law Section 43236 mandates that cancer insurance policies in the state provide coverage for the treatment costs associated with a covered cancer diagnosis. These treatment costs may include hospitalization, surgery, chemotherapy, radiation therapy, and other medically necessary services for covered cancers as defined by the policy. Question 24. An agent is explaining individual health insurance policies to a client in New York. The client asks about the process for renewing their current individual health insurance policy. According to New York regulations, an insurer cannot cancel a guaranteed renewable individual health insurance policy based on A. The policyholder's age. B. The policyholder's health status. C. Non-payment of premiums. D. Filing too many claims. The correct answer is B. The policyholder's health status. Guaranteed renewable individual health insurance policies in New York cannot be canceled by the insurer based on the policyholder's health status. This protects individuals with pre-existing conditions or those who develop health problems after enrollment. However, insurers can still cancel coverage for non-payment of premiums or violating policy terms. Question 25. Ms. Johnson is a licensed agent in New York and is explaining health insurance claims to a client. The client inquires about the process for appealing a denied health insurance claim. According to New York regulations, which of the following statements is most accurate regarding the appeals process for a denied health insurance claim? A. Appeals must be submitted directly to the healthcare provider. B. The insurance company provides a specific time frame for submitting an appeal. C. The New York State Department of Financial Services handles all claim appeal requests. D. Appeals can only be submitted electronically through the insurer's online portal. The correct answer is B. The insurance company provides a specific time frame for submitting an appeal. New York insurance law requires health insurance companies to have a clear and accessible appeals process for denied claims. This process typically involves submitting a written appeal to the insurer within a specific time frame outlined in the policy or denial notification. The time frame for submitting an appeal can vary by company, so option B is most accurate. Question 26. Mr. Young is a resident of New York and is considering purchasing a disability income insurance policy. He is concerned about the definition of disability within the policy. New York State requires disability income insurance policies to define disability using which of the following criteria? A. Inability to perform the specific duties of the policyholder's current job. B. Inability to perform any gainful occupation for which the policyholder is qualified. C. Hospitalization for a period exceeding a certain number of days. D. Total loss of income due to a disability. The correct answer is B. Inability to perform any gainful occupation for which the policyholder is qualified. New York insurance law section 3-1-4 requires disability income insurance policies in the state to define disability based on the insured's inability to perform any gainful occupation for which they are qualified by education, training, or experience. This broader definition helps ensure benefits are paid even if the policyholder cannot return to their specific job but can still work in another capacity. Question 27. An agent is explaining replacement of life insurance policies to a client in New York. The client asks about the notice requirements for replacing an existing life insurance policy with a new one. According to New York insurance law, which of the following statements is true regarding replacement of life insurance policies? A. There is no requirement to notify the existing life insurance company before replacing the policy. B. The replacing insurer must provide a written notice to the policyholder outlining the risks of replacing the current policy. C. The policyholder must obtain written consent from the beneficiary before replacing the existing life insurance policy. D. Replacement is only allowed if the new policy offers a significantly higher death benefit. The correct answer is B. The replacing insurer must provide a written notice to the policyholder outlining the risks of replacing the current policy. New York insurance law section 2-13 requires the replacing insurer to provide a written notice, also known as a replacement notice, to the policyholder before replacing an existing life insurance policy. This notice outlines the features of both the existing and proposed new policy, along with potential risks associated with replacing the current coverage. Question 28. Ms. Garcia is a health insurance agent in New York and is explaining the concept of mandated benefits to a client. According to New York State regulations, which of the following benefits must be included in all individual and small group health insurance plans offered in the state? A. Vision care services. B. Prescription drug coverage. C. Dental coverage for adults. D. Hospitalization coverage. The correct answer is D. Hospitalization coverage. New York State, under the NY Essential Health Benefits Package, EHB, mandates that all individual and small group health insurance plans offered in the state must cover 10 essential health benefits categories defined by the Affordable Care Act, ACA. These categories include hospitalization, preventive and wellness services, maternity and newborn care, mental health and substance use disorder services, among others. While vision care, prescription drugs, and adult dental may be offered as benefits, they are not mandated by the EHB package in New York. Option D is the only category required by law. Question 29. Mr. Khan is a resident of New York and is considering purchasing a long-term care insurance policy. He wants to understand the different types of benefits offered by these policies. New York State regulations require long-term care insurance policies to offer coverage for which of the following levels of care? A. Hospitalization only. B. Home health care services and facility-based care. C. Adult daycare services. D. Hospice care for end-of-life comfort. The correct answer is B. Home health care services and facility-based care. New York Insurance Law Section 43333 mandates that long-term care insurance policies in the state offer coverage for both home health care services and facility-based care. Home health care can include assistance with daily living activities in the policyholder's home, while facility-based care covers services provided in nursing homes or assisted living facilities. Question 30. An agent is explaining professional liability insurance, also known as errors and omissions, E&O, insurance, to a client who works as a healthcare provider in New York. The client inquires about the types of claims covered by their E&O insurance policy. According to New York regulations, E&O insurance for healthcare providers typically covers claims arising from which of the following? A. Damage to the policyholder's property. B. Work-related injuries sustained by the policyholder. C. Allegations of negligence or malpractice in performing professional services. D. Loss of income due to a business interruption. The correct answer is C. Allegations of negligence or malpractice in performing professional services. E&O insurance for healthcare providers in New York is designed to protect them from financial losses arising from allegations of negligence or malpractice in performing their professional duties. This can include claims of misdiagnosis, treatment errors, or failure to meet the standard of care. Question 31. Ms. Davis, a licensed agent in New York, is explaining HIPAA, Health Insurance Portability and Accountability Act, privacy regulations to a client. The client inquires about who has access to their protected health information, FI, under HIPAA. According to HIPAA regulations, which of the following statements is true regarding access to a policyholder's FI? A. Anyone can access a policyholder's FI with written consent. B. A policyholder's FI can be shared freely for marketing purposes. C. Healthcare providers can access a policyholder's FI for treatment purposes without consent. D. Health insurance companies can sell a policyholder's FI to third parties. The correct answer is C. Healthcare providers can access a policyholder's FI for treatment purposes without consent. HIPAA privacy regulations restrict the disclosure of a policyholder's FI. However, there are exceptions for healthcare providers who need access to FI for treatment, payment, or healthcare operations. In such cases, a patient's written consent is not always required. Question 32. Mr. Hernandez is a resident of New York and is considering purchasing a critical illness insurance policy. He wants to understand the concept of a financial exclusion rider. New York state regulations allow critical illness insurance policies to include optional riders like financial exclusion riders. What does a financial exclusion rider typically do in a critical illness insurance policy? A. It excludes coverage for critical illnesses diagnosed within a certain period after policy purchase. B. It increases the death benefit payout if the policyholder dies from a critical illness. C. It waives premium payments if the policyholder is diagnosed with a critical illness. D. It allows the policyholder to add additional critical illnesses to the covered list. The correct answer is A. It excludes coverage for critical illnesses diagnosed within a certain period after policy purchase. Financial exclusion riders in critical illness insurance policies are optional add-ons that may exclude coverage for specific critical illnesses diagnosed within a set period, usually 30, 60, or 90 days, after policy purchase. This rider can help lower the premium cost by reducing the insurer's risk of paying out a benefit shortly after policy issuance. Question 33. An agent is explaining life insurance policy contestability to a client in New York. The client asks about the time frame during which a life insurance company can contest the policy based on misrepresentation on the application. According to New York insurance law, The contestable period for a life insurance policy typically lasts for A. 1 year from the policy issue date. B. 2 years from the policy issue date. C. The entire lifetime of the insured. D. It depends on the specific misrepresentation made. The correct answer is B. 2 years from the policy issue date. New York Insurance Law Section 3-1-4 establishes a contestable period for life insurance policies in the state. During this contestable period, typically 2 years from the policy issue date, the insurer can investigate the application for misrepresentations and potentially contest the policy by denying the death benefit if a material misrepresentation was made. Question 34. Ms. Chen, a licensed accident and health insurance agent in New York, is explaining short-term health insurance plans to a client. The client inquires about the limitations on coverage duration for short-term health plans. According to New York regulations, what is the maximum permissible duration for coverage under a short-term health insurance plan? A. 3 months. B. 6 months. C. 12 months. D. There is no maximum duration limit in New York. The correct answer is B. 6 months. New York state regulations limit the coverage duration of short-term health insurance plans to a maximum of 6 months. This is in contrast to major medical plans that typically offer year-long coverage. Short-term plans are intended to provide temporary coverage for gaps between major medical plans or for individuals who need temporary coverage while waiting to qualify for other insurance options. Question 35. Mr. Lopez is a resident of New York and is considering purchasing a disability income insurance policy. He wants to understand the concept of an elimination period. New York state regulations do not require disability income insurance policies to include an elimination period. However, if a policy does include an elimination period, what does it typically represent? A. The period during which the insurer can contest the policy. B. The waiting period before benefit payments begin after a disability event. C. A guaranteed period of benefit payments regardless of the disability cause. D. The time frame for filing a claim with the disability insurance company. The correct answer is B. The waiting period before benefit payments begin after a disability event. While not mandated by New York law for all disability income insurance policies, an elimination period is a common feature in these plans. It represents the waiting period between the onset of a disability and when benefit payments commence. The elimination period can vary depending on the policy but is typically 30, 60, or 90 days. Question 36. An agent is explaining Medicare supplement insurance benefits to a client in New York. The client inquires about the process for choosing a Medicare supplement plan. According to New York regulations, Medicare supplement plans are standardized by the federal government with specific benefit packages identified by letters. Which of the following statements is true regarding Medicare supplement plans in New York? A. All Medicare supplement plans in New York offer identical coverage. B. Clients can choose any Medicare supplement plan regardless of their location in New York. C. Standardized benefit packages identified by letters allow for easier comparison between plans. D. New York State mandates that everyone on Medicare must enroll in a supplement plan. The correct answer is C. Standardized benefit packages identified by letters allow for easier comparison between plans. Medicare supplement plans in New York are standardized by the federal government with specific benefit packages identified by letters, e.g., Plan A, Plan F, etc. This standardization allows for easier comparison between plans offered by different insurance companies as they all cover the same core benefits within a specific letter designation. Question 37. Ms. Garcia is a health insurance agent in New York and is explaining the concept of network providers to a client. The client inquires about the benefits of using in-network providers within their health insurance plan. According to New York regulations, which of the following statements is most accurate regarding in-network providers? A. In-network providers are required to accept all patients with a valid insurance card. B. Using in-network providers typically results in lower out-of-pocket costs for the policyholder. C. Health insurance plans cannot restrict coverage to only in-network providers. D. In-network providers are specialists unavailable outside the insurance plan's network. The correct answer is B. Using in-network providers typically results in lower out-of-pocket costs for the policyholder. In-network providers within a health insurance plan are healthcare professionals who have contracted with the insurance company to provide services at pre-negotiated rates. Using in-network providers typically results in lower out-of-pocket costs for the policyholder because the insurer has already agreed to cover a significant portion of the bill. Question 38. Mr. Khan is a resident of New York and is considering purchasing a long-term care insurance policy. He wants to understand the concept of benefits triggers. New York state regulations require long-term care insurance policies to define specific events or conditions that trigger benefit payments. Which of the following scenarios would most likely trigger a benefit payout under a long-term care insurance policy in New York? A. A diagnosis of a chronic medical condition requiring ongoing medication management. B. The need for assistance with 2 or more activities of daily living, ADLs, due to illness or injury. C. Hospitalization for a surgery followed by a successful recovery. D. Experiencing a decline in cognitive function diagnosed by a physician. The correct answer is B. The need for assistance with 2 or more activities of daily living, ADLs, due to illness or injury. Long-term care insurance policies in New York typically define benefits triggers based on functional limitations. A common trigger is the need for assistance with 2 or more activities of daily living, ADLs, such as bathing, dressing, eating, toileting, and transferring. This scenario, B, aligns with the focus on functional dependence that qualifies for benefit payments. Question 39. An agent is explaining professional liability insurance, also known as errors and omissions, E&O, insurance, to a client who works as a financial advisor in New York. The client inquires about the legal defense coverage typically included in their E&O insurance policy. What does legal defense coverage typically provide in an E&O insurance policy for financial advisors? A. Coverage for any fines or penalties imposed by regulatory authorities. B. Reimbursement for financial losses suffered by the advisor's clients. C. Payment of legal fees incurred in defending against allegations of professional misconduct. D. Coverage for damages to the advisor's office equipment. The correct answer is C. Payment of legal fees incurred in defending against allegations of professional misconduct. Legal defense coverage is a critical component of E&O insurance for financial advisors. It typically pays for legal fees incurred in defending against lawsuits or claims of professional negligence or misconduct brought by clients. This can include costs associated with lawyers, investigators, and court appearances. Question 40. Mr. Hernandez is a resident of New York and is considering purchasing a variable universal life insurance policy. He wants to understand the investment risk associated with these policies. New York state regulations require variable universal life insurance policies to include a disclosure document explaining the investment risks involved. Which of the following statements is true regarding variable universal life insurance policies in New York? A. The policyholder has no control over the investment options within the variable universal life insurance policy. B. The cash value of a variable universal life insurance policy is guaranteed by the insurance company. C. Variable universal life insurance policies offer the potential for higher returns but also carry investment risks. D. The death benefit payout under a variable universal life insurance policy is a fixed amount. The correct answer is C. Variable universal life insurance policies offer the potential for higher returns but also carry investment risks. Variable universal life insurance policies in New York are linked to investment vehicles like mutual funds. The policyholder has some control over how the cash value portion of the policy is invested, which offers the potential for higher returns compared to traditional whole life insurance. However, this investment flexibility also carries risk, as the cash value can fluctuate based on market performance. Question 41. Mr. Ramirez is a resident of New York and is considering purchasing a long-term care insurance policy. He is concerned about the potential for needing nursing home care in the future. According to New York State regulations, which of the following statements is most accurate regarding long-term care insurance policies? A. Long-term care insurance policies in New York are mandated by the state and all residents must purchase one. B. Long-term care insurance policies in New York must offer benefits that comply with minimum standards set by the New York State Department of Financial Services, NYDFS. C. Only residents over the age of 65 can purchase long-term care insurance in New York. D. Long-term care insurance policies in New York are not regulated by the state. The correct answer is B. Long-term care insurance policies in New York must offer benefits that comply with minimum standards set by the New York State Department of Financial Services, NYDFS. In New York, long-term care insurance policies are not mandatory, but they are regulated by the NYDFS. This means insurers must comply with minimum standards regarding benefits offered, consumer protections, and disclosures. These standards help ensure policies are comprehensive and meet the needs of New Yorkers considering long-term care. Question 42. Ms. Lee is a life insurance agent licensed in New York. A client interested in purchasing a universal life insurance policy asks Ms. Lee about the tax implications of the policy. How should Ms. Lee respond most accurately regarding the tax treatment of universal life insurance in New York? A. All death benefit proceeds from a universal life insurance policy are exempt from income taxes in New York, regardless of the policyholder's residency. B. Death benefit proceeds from a universal life insurance policy are always taxable income in New York. C. Only the amount of premium paid that exceeds the death benefit is considered taxable income in New York. D. The tax treatment of a universal life insurance policy in New York depends on how the policy's cash value is accessed and used. The correct answer is D. The tax treatment of a universal life insurance policy in New York depends on how the policy's cash value is accessed and used. In New York, death benefits from a life insurance policy are generally income tax-free. However, withdrawals from the cash value portion of a universal life insurance policy may be subject to income taxes depending on how the funds are accessed. If withdrawals exceed the amount of premium paid, the excess may be considered taxable income. It's important for life insurance agents to understand these tax implications but to advise clients to consult with a tax professional for specific guidance. Question 43. A New York health insurance company is developing a new health insurance plan that will cover mental health services. The company wants to ensure compliance with New York's Mental Health Parity Act. Which of the following requirements is most likely included in the Mental Health Parity Act? A. The health insurance plan must cover all mental health conditions equally, with no benefit limitations compared to physical health conditions. B. The health insurance plan can require higher copays or deductibles for mental health services compared to physical health services. C. The health insurance plan is not required to cover any mental health services. D. The health insurance plan can deny coverage for mental health conditions based on pre-existing conditions. The correct answer is A. The health insurance plan must cover all mental health conditions equally, with no benefit limitations compared to physical health conditions. The New York Mental Health Parity Act prohibits health insurance companies from offering plans that place stricter limitations on mental health benefits compared to medical, surgical benefits. This means co-pays, deductibles, and benefit caps for mental health services must be comparable to those for physical health services. Question 44. Mrs. Diaz is a resident of New York and is considering purchasing a health insurance policy. She is concerned about the cost of the policy and has seen advertisements for guaranteed renewable health insurance. According to New York State regulations, which of the following statements is least accurate regarding guaranteed renewable health insurance policies? A. Guaranteed renewable health insurance policies cannot be canceled by the insurer as long as premiums are paid on time. B. Guaranteed renewable health insurance policies may have premium increases approved by the New York State Department of Financial Services, NYDFS. C. Guaranteed renewable health insurance policies can be non-renewed at the end of the policy period if the insurer decides to no longer offer that specific plan. D. Guaranteed renewable health insurance policies are typically more expensive than individual health insurance policies that are not guaranteed renewable. The correct answer is C. Guaranteed renewable health insurance policies can be non-renewed at the end of the policy period if the insurer decides to no longer offer that specific plan. Guaranteed renewable health insurance requires the insurer to renew the policy each year, but they can choose to discontinue offering that specific plan entirely. In such a scenario, the insurer would be required to offer Mrs. Diaz alternative plans but might not be obligated to offer a guaranteed renewable option. Question 45. Mr. Garcia is a life insurance agent licensed in New York and is explaining disability income insurance to a client. The client asks Mr. Garcia how long they would have to wait to receive benefits after becoming disabled. Which of the following factors would most likely impact the waiting period for disability income insurance benefits? A. The age of the client. B. The occupation of the client. C. The cause of disability, accident versus illness. D. The elimination period defined in the disability income insurance policy. The correct answer is D. The elimination period defined in the disability income insurance policy. The elimination period is a set waiting period defined in the disability income insurance policy. This is the time frame between the onset of disability and when benefit payments begin. The client would need to wait for the elimination period to pass before receiving any benefits. Question 46. A New York health insurance company is developing a new individual health insurance plan. The plan will be marketed to young adults, ages 18 to 30, and will not include coverage for maternity services. Is this practice allowed under the Affordable Care Act, ACA, in New York? A. Yes. The plan can exclude maternity benefits as long as it is marketed to a specific age group. B. No. The ACA mandates that all individual health insurance plans must cover essential health benefits, including maternity and newborn care. C. The plan can exclude maternity benefits but must clearly disclose this limitation to potential enrollees. D. The answer depends on whether the young adults have access to alternative health insurance plans that cover maternity services. The correct answer is B. No. The ACA mandates that all individual health insurance plans must cover essential health benefits, including maternity and newborn care. The ACA requires individual health insurance plans to cover essential health benefits, which includes maternity and newborn care. This applies to all individual health insurance plans offered in New York, regardless of the target age group. Question 47. Ms. Chen is a resident of New York and is considering applying for Medicare Advantage, MA, coverage. She is currently enrolled in traditional Medicare, Parts A and B, and a Medigap plan, supplemental insurance. According to New York State regulations, which of the following statements is true regarding Ms. Chen's options? A. Ms. Chen can enroll in a Medicare Advantage plan while keeping her Medigap plan. B. Ms. Chen must disenroll from her Medigap plan if she chooses to enroll in a Medicare Advantage plan, as MA plans typically offer similar benefits. C. Ms. Chen can keep her traditional Medicare, Parts A and B, and enroll in a separate Medicare Advantage plan, but not both. D. Ms. Chen cannot enroll in a Medicare Advantage plan if she is already covered by a Medigap plan in New York. The correct answer is B. Ms. Chen must disenroll from her Medigap plan if she chooses to enroll in a Medicare Advantage plan, as MA plans typically offer similar benefits. Medicare Advantage plans are designed to be an alternative to traditional Medicare, Parts A and B, with supplemental coverage. In New York, if Ms. Chen enrolls in a Medicare Advantage plan, her Medigap plan benefits would likely become redundant and duplicate some of the coverage provided by the MA plan. Therefore, she would typically need to disenroll from her Medigap plan when choosing a Medicare Advantage option. Question 48. Mr. Hernandez is a life insurance agent licensed in New York and is presenting Variable Universal Life Insurance, VUL, to a client. The client inquires about the potential risks and rewards associated with VUL policies. How should Mr. Hernandez most accurately explain the investment risk associated with VUL policies? A. VUL policies offer guaranteed returns on the investment portion of the policy, regardless of market performance. B. VUL policies are similar to whole life insurance and have no investment risk. C. The cash value accumulation in a VUL policy is tied to the performance of underlying investment options chosen by the policyholder, which can fluctuate based on market conditions. D. VUL policies are primarily focused on the death benefit, and investment risk is minimal. The correct answer is C. The cash value accumulation in a VUL policy is tied to the performance of underlying investment options chosen by the policyholder, which can fluctuate based on market conditions. Variable Universal Life Insurance, VUL, offers a death benefit and a cash value component. The cash value grows based on the performance of investment options chosen by the policyholder. This introduces investment risk, as the value can fluctuate depending on market conditions. Mr. Hernandez should explain this risk clearly to the client. Question 49. A New York health insurance company is developing a new group health insurance plan for small businesses. The plan design includes a health savings account, HSA, option. According to New York state regulations, which of the following requirements must be met for a plan to qualify as an HSA-compatible plan? A. The plan must have a high-deductible health plan, HDHP, as defined by the IRS. B. The plan can have any deductible amount, but must offer the option to contribute to an HSA. C. The plan design does not need to comply with any specific requirements as long as it is offered to small businesses. D. Only certain types of small businesses in New York are eligible to offer HSA-compatible plans. The correct answer is A. The plan must have a high-deductible health plan, HDHP, as defined by the IRS. To qualify as an HSA-compatible plan in New York, the plan must meet the definition of a high-deductible health plan, HDHP, as established by the Internal Revenue Service, IRS. This ensures that contributions to an HSA are tax-advantaged. Question 50. Mr. Ramirez is a resident of New York and is considering purchasing a long-term care insurance policy. Under New York state law, which of the following statements is most accurate regarding guaranteed renewal provisions in long-term care insurance policies? A. The insurance company can cancel the policy at any time, but Mr. Ramirez can renew it as long as he continues to pay premiums. B. The policy can only be canceled by Mr. Ramirez, and the insurance company is required to offer him renewal every year. C. Both Mr. Ramirez and the insurance company have the right to cancel the policy at any time, with or without reason. D. The insurance company cannot cancel the policy as long as Mr. Ramirez pays premiums and meets the terms of the policy, but Mr. Ramirez can choose not to renew it. The correct answer is D. The insurance company cannot cancel the policy as long as Mr. Ramirez pays premiums and meets the terms of the policy, but Mr. Ramirez can choose not to renew it. New York insurance law requires guaranteed renewal provisions in most long-term care insurance policies. This means that the insurance company cannot cancel the policy as long as Mr. Ramirez pays his premiums and meets the terms of the policy. However, Mr. Ramirez has the right to choose not to renew the policy at any time. Question 51. Ms. Lee is a life insurance agent licensed in New York. A client asks Ms. Lee about the difference between a viatical settlement and a life settlement. Which of the following is the best explanation for Ms. Lee to provide? A. A viatical settlement can only be used for terminally ill individuals, while a life settlement can be used by anyone regardless of health status. B. A viatical settlement involves selling a life insurance policy to a third party while the insured is still alive, while a life settlement can only occur after the death of the insured. C. There is no difference between a viatical settlement and a life settlement. They are just two different terms for the same process. D. A viatical settlement offers a higher payout than a life settlement because the insured is terminally ill. The correct answer is A. A viatical settlement can only be used for terminally ill individuals, while a life settlement can be used by anyone regardless of health status. Both viatical settlements and life settlements involve selling a life insurance policy to a third party while the insured is still alive. However, there is a key difference. Viatical settlements are for terminally ill individuals with a life expectancy of less than 24 months. Life settlements can be used by individuals with any health condition, but they typically result in a lower payout than viatical settlements due to the longer life expectancy of the insured. Question 52. A New York health insurance policy covers a prescription drug benefit. The policy has a copayment for each prescription filled. According to New York state regulations, which of the following statements is true regarding how much information the insurance company must provide to the insured about the copayment amount for a specific drug? A. The insurance company does not need to provide any information about the copayment amount up front. The insured will find out the copayment at the pharmacy. B. The insurance company must provide a formulary that lists the copayment amount for each covered drug. C. The insurance company must have a customer service line where the insured can call to find out the copayment for a specific drug. D. All of the above are true. The correct answer is D. All of the above are true. New York State mandates that health insurance companies provide insureds with clear and understandable information about their prescription drug benefits, including copayment amounts. This information must be provided in multiple ways, such as through a formulary listing copayments for covered drugs, a customer service line for inquiries, and potentially online access to this information. Question 53. Ms. Hernandez is a resident of New York and is considering purchasing a disability income insurance policy. Which of the following statements is most accurate regarding the definition of disability under a typical disability income insurance policy in New York? A. Disability is defined as any illness or injury that prevents the insured from working in any occupation. B. Disability is defined as an inability to perform the specific duties of the insured's current occupation. C. There is no universal definition of disability in New York. Each policy defines it differently. D. Disability is defined as an inability to work due to a mental or physical impairment for a specified period of time. The correct answer is D. Disability is defined as an inability to work due to a mental or physical impairment for a specified period of time. While there may be variations in wording, most disability income insurance policies in New York define disability as an inability to work due to a mental or physical impairment for a specified period of time, typically at least 90 days. This definition often includes an inability to perform the substantial and material duties of one's own occupation or any other occupation for which the insured is qualified by education, training, or experience. Question 54. Mr. Khan is a life insurance agent licensed in New York and is explaining the concept of insurable interest to a client. Which of the following is the best explanation for Mr. Khan to provide? A. An insurable interest exists only between blood relatives. B. An insurable interest is a financial stake in the life of another person. C. In New York, insurable interest is not required to purchase a life insurance policy. D. An insurable interest is required only for large life insurance policies. The correct answer is B. An insurable interest is a financial stake in the life of another person. In New York, as in most states, an insurable interest is required to purchase a life insurance policy. This means that the beneficiary named on the policy must have a reasonable expectation of financial loss upon the death of the insured. A financial stake in the life of another person can take many forms, such as a close family relationship, a business partnership, or a creditor-debtor relationship. Question 55. A New York group health insurance policy covers mental health services. The policy requires insureds to obtain a referral from a primary care physician, PCP, before seeing a mental health specialist. This is an example of which managed care technique? A. Utilization review. B. Risk selection. C. Case management. D. Gatekeeper system. The correct answer is D. Gatekeeper system. A gatekeeper system is a managed care technique that requires insureds to obtain a referral from a primary care physician, PCP, before seeing a specialist, including a mental health specialist. The PCP acts as a gatekeeper by coordinating care and ensuring that specialist visits are medically necessary. Question 56. A New York health insurance policy offers coverage for physical therapy services. The policy has an annual deductible for physical therapy. According to New York state regulations, which of the following statements is true regarding the application of the deductible to physical therapy services? A. The deductible applies only to the cost of the initial evaluation by the physical therapist. B. The deductible applies to all covered physical therapy services until it is met, then the plan pays 100%. C. The deductible applies only after the copayment for each physical therapy session is met. D. There are no regulations in New York regarding how deductibles apply to physical therapy services. The correct answer is B. The deductible applies to all covered physical therapy services until it is met, then the plan pays 100%. In New York, deductibles typically apply to all covered expenses under a health insurance policy until the deductible amount is met. Once the deductible is met, the plan typically pays a certain percentage, coinsurance, of covered expenses, and the insured is responsible for the remaining portion, copayment. This applies to physical therapy services as well, unless the policy specifically states otherwise. Question 57. Ms. Garcia is a resident of New York and is considering purchasing a Medicare supplement policy, Medigap. Which of the following statements is most accurate regarding Medigap policies in New York? A. A Medigap policy is a replacement for Medicare Part A and Part B. B. Medigap policies are standardized by the federal government, offering the same benefits nationwide. C. New York State mandates that all residents purchase a Medigap policy. D. Medigap policies help to pay for some of the out-of-pocket costs associated with original Medicare, Parts A and B. The correct answer is D. Medigap policies help to pay for some of the out-of-pocket costs associated with original Medicare, Parts A and B. Medigap policies are supplemental insurance plans designed to help pay for some of the out-of-pocket costs associated with original Medicare, Parts A and B. These costs can include deductibles, coinsurance, and copays. Medigap plans are standardized by the National Association of Insurance Commissioners, NAIC, with specific benefit packages identified by letters A, B, C, etc. However, some states may have additional standardization rules. New York does not mandate that residents purchase a Medigap policy. Question 58. Mr. Jackson is a life insurance agent licensed in New York and is explaining replacement of life insurance to a client. New York State has specific regulations regarding replacement. Which of the following is most likely a required element of a replacement notice that Mr. Jackson must provide to the client? A. A detailed explanation of the agent's commission on the new policy. B. A side-by-side comparison of the benefits of the old and new policies. C. A written statement from the client acknowledging their desire to replace the existing policy. D. Mr. Jackson's recommendation on whether or not to replace the existing policy? The correct answer is B. A side-by-side comparison of the benefits of the old and new policies. New York insurance law requires a replacement notice to be delivered to the policyholder when replacing life insurance. This notice must include a side-by-side comparison of the benefits of the old and new policies, including information about premium payments, cash values, death benefits, and any riders attached to the policies. The notice does not require the agent's commission disclosure or recommendation on replacement. The client's written statement acknowledging replacement may be required by the insurance company but not mandated by the state. Question 59. A health insurance company in New York offers individual health insurance policies. The company has received an application for coverage from a young adult who is still covered under a parent's employer-sponsored group health plan. According to New York state law, which of the following statements is true regarding the young adult's eligibility for an individual policy? A. The insurance company cannot deny coverage based solely on the fact that the young adult has access to group coverage. B. The young adult is automatically eligible for an individual policy from any company in New York. C. The insurance company can deny coverage based on pre-existing health conditions. D. The young adult can only obtain an individual policy if they are no longer financially dependent on their parents. The correct answer is A. The insurance company cannot deny coverage based solely on the fact that the young adult has access to group coverage. Thanks to the Affordable Care Act, and subsequent New York state legislation, young adults can stay on a parent's employer-sponsored group health plan until age 26. Additionally, insurance companies cannot deny coverage based solely on the fact that an applicant has access to other group health insurance coverage. However, they can deny coverage based on pre-existing health conditions, subject to state and federal regulations. Question 60. Ms. Davis is a resident of New York and is considering purchasing a long-term care insurance policy. Which of the following statements is most accurate regarding benefits under a long-term care insurance policy in New York? A. Long-term care insurance policies in New York are required to cover all nursing home costs for the insured. B. Benefits under a long-term care insurance policy are paid directly to the insured to use at their discretion. C. Long-term care insurance policies typically cover a variety of long-term care services, not just nursing homes. D. The amount of benefits paid under a long-term care policy in New York is determined by the policyholder's age at purchase. The correct answer is C. Long-term care insurance policies typically cover a variety of long-term care services, not just nursing homes. Long-term care insurance policies typically cover a variety of long-term care services, including nursing home care, assisted living facilities, home health care, and adult daycare. The specific services covered and the daily benefit amount will vary depending on the policy. Benefits are usually not paid directly to the insured but rather to the facility or provider delivering the care. While age at purchase can influence premiums, it doesn't solely determine the benefit amount. Question 61. Mr. Lopez is a life insurance agent licensed in New York and is presenting different life insurance products to a client. Which of the following statements is the best explanation for the difference between a whole life insurance policy and a universal life insurance policy? A. Whole life insurance policies offer no cash value accumulation, while universal life policies do. B. Whole life insurance policies have a fixed premium and death benefit, while universal life policies offer flexibility in both. C. Whole life insurance policies are only available for young individuals, while universal life is suitable for all ages. D. Whole life insurance policies are better for short-term needs, while universal life is better for long-term needs. The correct answer is B. Whole life insurance policies have a fixed premium and death benefit, while universal life policies offer flexibility in both. Both whole life and universal life insurance offer death benefits and cash value accumulation. However, there are key differences. Premiums and death benefit. Whole life features a fixed premium and death benefit throughout the policy term. Universal life offers more flexibility, allowing for adjustments to premium payments and death benefit amounts within certain limits. Cash value. Whole life typically has a guaranteed minimum cash value growth rate. Universal life cash value accumulation is not guaranteed and may vary based on investment performance within the policy. These are not the only differences, but they are some of the most significant for understanding the distinction between whole life and universal life insurance. Question 62. Ms. Rodriguez is a resident of New York and is considering a long-term care insurance policy. According to New York State regulations, which of the following statements is most accurate regarding mandated benefits in long-term care insurance policies? A. Carriers must offer policies with benefits that include home health care, assisted living facility care, and nursing home care. B. Policies must provide benefits for at least one type of long-term care service, but the specific services covered are at the discretion of the carrier. C. Only hospitalization following a long-term care stay is a mandated benefit. D. There are no mandated benefits required in New York for long-term care insurance. The correct answer is A. Carriers must offer policies with benefits that include home health care, assisted living facility care, and nursing home care. New York State mandates specific benefits in long-term care insurance policies under Insurance Law Section 4303. These mandated benefits include coverage for home health care, assisted living facility care, and nursing home care. It's important to remember that while these benefits are mandated, the policy details like daily benefit amounts and duration of coverage can vary between carriers. Question 63. Mr. Khan is a life insurance agent licensed in New York. A client interested in a universal life policy asks about the flexibility of premium payments. Mr. Khan should explain that under New York insurance regulations, universal life policies A. Require a minimum guaranteed premium payment throughout the entire policy term. B. Allow for premium payments to be skipped altogether if the policy has sufficient cash value. C. Offer some flexibility in premium payments, but there are minimum requirements to avoid policy lapse. D. Treat premium payments similar to term life insurance, with a fixed premium amount due each period. The correct answer is C. Offer some flexibility in premium payments, but there are minimum requirements to avoid policy lapse. Universal life insurance offers flexibility in premium payments compared to traditional whole life policies. New York insurance regulations allow policyholders to adjust premium payments within certain limits. While there might not be a minimum guaranteed payment throughout the entire term, there are minimum premium requirements to avoid lapsing the policy and ensure sufficient cash value accumulation. Mr. Khan should advise his client to consult the specific policy details for allowed premium flexibility. Question 64. A health insurance company is developing a new health maintenance organization, HMO, plan in New York. According to New York State regulations, which of the following statements is most likely true regarding the provider network for the HMO plan? A. The HMO plan can offer a nationwide network of healthcare providers. B. The HMO plan must offer a network of providers geographically limited to a specific area within New York. C. There are no specific network requirements for HMO plans in New York. D. The HMO plan can design its provider network without any limitations. The correct answer is B. The HMO plan must offer a network of providers geographically limited to a specific area within New York. HMO plans in New York typically have a limited provider network. New York insurance law requires HMOs to offer a network of providers that is accessible to a substantial number of enrollees within a specific geographic area. This ensures reasonable access to healthcare services for plan participants. While the network might not be nationwide, it should be sufficient to meet the needs of the covered population within the designated service area. Question 65. Ms. Garcia is a health insurance agent in New York and is explaining Medicare supplement policies to a client. According to New York state regulations, which of the following statements is most accurate regarding the standardization of Medicare supplement policies? A. Standardized Medicare supplement policies offer identical coverage and benefits across all carriers in New York. B. Standardized Medicare supplement plans are only available from government agencies. C. Carriers have complete flexibility in designing benefits for Medicare supplement policies. D. Standardized Medicare supplement plans have specific benefit structures defined by the state, allowing for easier comparison between carriers. The correct answer is D. Standardized Medicare supplement plans have specific benefit structures defined by the state, allowing for easier comparison between carriers. Medicare supplement policies in New York are standardized under Insurance Law Article 31. This means that plans with the same letter designation, e.g., Plan G, must offer the same essential health benefits. This standardization allows consumers to compare plans from different carriers more easily based on factors like premiums and network coverage, while ensuring a baseline level of standardized benefits. Question 66. Mr. Martinez is a resident of New York considering a disability income insurance policy. He asks his agent about the definition of disability under the policy. According to New York insurance regulations, which of the following statements is most likely included in the definition of disability for disability income insurance? A. The inability to perform any of the essential duties of one's regular occupation. B. Any medical condition that results in hospitalization for more than 30 days. C. A temporary illness or injury that prevents work for a short period. D. The inability to perform any job for which the insured is qualified. The correct answer is A. The inability to perform any of the essential duties of one's regular occupation. Disability income insurance policies in New York typically define disability based on the inability to perform one's regular occupation. This definition often specifies a certain time frame, e.g., 12 months, during which the insured cannot perform the essential duties of their current job with reasonable accommodation. It's important to note that specific definitions can vary by policy, so Mr. Martinez should carefully review the policy wording to understand the exact disability criteria. Question 67. An insurance company is developing a new critical illness insurance policy in New York. According to New York state regulations, which of the following statements is most likely true regarding covered conditions in a critical illness policy? A. The policy must cover all critical illnesses identified by a national medical association. B. There are no specific mandated illnesses that critical illness insurance policies must cover in New York. C. The policy can define covered critical illnesses at the discretion of the carrier. D. New York State mandates a specific list of critical illnesses that all critical illness policies must cover. The correct answer is C. The policy can define covered critical illnesses at the discretion of the carrier. New York State does not mandate specific covered conditions for critical illness insurance policies. However, Insurance Law Section 4604 outlines disclosure requirements for these policies. This means carriers have the flexibility to design their own list of covered critical illnesses, but they must clearly disclose this information in the policy details. This allows consumers to compare plans based on the specific critical illnesses covered by each policy. Question 68. Ms. Chen is a life insurance agent in New York and is explaining replacement of life insurance policies to a client. According to New York insurance regulations, which of the following statements is most accurate regarding replacement requirements? A. There are no specific requirements for informing policyholders about replacing an existing life insurance policy with a new one. B. Replacement is only allowed if the new policy offers a guaranteed lower premium. C. Agents must ensure the client understands the potential benefits and drawbacks of replacing a life insurance policy. D. Replacement is prohibited unless the existing policy has been in effect for at least 2 years. The correct answer is C. Agents must ensure the client understands the potential benefits and drawbacks of replacing a life insurance policy. New York insurance regulations emphasize informed decision-making when replacing life insurance policies. This includes a requirement for agents to provide a written notice explaining the potential benefits and drawbacks of replacing an existing policy with a new one. This notice, often referred to as a replacement notice, should outline factors like cash surrender value, coverage differences, and potential premium changes to help the client make an informed decision. Question 69. Mr. Lee is a resident of New York considering a group health insurance plan offered by his employer. He is concerned about the portability of his coverage if he leaves his job. According to New York continuation of coverage requirements, which of the following statements is most likely true regarding COBRA continuation rights? A. COBRA continuation is only available for individual health insurance plans, not employer-sponsored group plans. B. COBRA allows continuation of coverage for a limited period at the group rate, even after employment ends. C. Employers are not required to offer COBRA continuation options under New York law. D. COBRA guarantees lifetime continuation of health insurance coverage regardless of employment status. The correct answer is B. COBRA allows continuation of coverage for a limited period at the group rate, even after employment ends. The Consolidated Omnibus Budget Reconciliation Act, COBRA, provides continuation rights for certain individuals who lose coverage under a group health plan. In New York, employers with at least 20 employees generally must offer COBRA continuation to qualified individuals who experience a qualifying event, such as job loss or reduction in hours. COBRA allows continuation of the same group health coverage for a limited period, typically 18 or 36 months, but the individual will be responsible for the full premium cost, employer contribution plus employee contribution. Question 70. An insurance company is developing a new accident insurance policy in New York. According to New York insurance regulations, which of the following statements is most accurate regarding benefits for accidental death? A. There is a mandated minimum benefit amount for accidental death in all accident insurance policies. B. Carriers have complete discretion in determining the benefit amount for accidental death. C. Accidental death benefits must be equal to the total policy face amount. D. Accident insurance policies cannot offer benefits for accidental death. The correct answer is B. Carriers have complete discretion in determining the benefit amount for accidental death. New York insurance regulations do not mandate a minimum benefit amount for accidental death in accident insurance policies. Carriers have flexibility in designing their accident insurance products, including the benefit amount for accidental death. It's important to note that accident insurance policies typically define accidental death with specific exclusions. Consumers should carefully review the policy details to understand the covered events and benefit limitations. Question 71. Ms. Hernandez is a resident of New York and is considering a long-term care insurance policy. She is concerned about the potential for premium increases in the future. According to New York state regulations, which of the following statements is most accurate regarding premium rate changes for long-term care insurance? A. Premiums for long-term care insurance policies cannot be increased under any circumstances. B. Carriers can only increase premiums for an entire policy class, not for individual policyholders. C. Guaranteed level premiums are a mandatory feature for all long-term care insurance policies in New York. D. Carriers may be able to increase premiums under certain conditions, with prior approval from the New York State Department of Financial Services. The correct answer is D. Carriers may be able to increase premiums under certain conditions, with prior approval from the New York State Department of Financial Services. New York insurance regulations allow carriers to request premium increases for long-term care insurance policies under certain circumstances. However, These requests must be filed with and approved by the New York State Department of Financial Services. The department considers factors like claims experience, interest rates, and overall market conditions before approving premium increases. While some long-term care policies may offer guaranteed level premiums, it's not mandatory for all policies in New York. Question 72. Mr. Kovaleski is a life insurance agent licensed in New York. A client interested in a variable universal life insurance policy asks about the investment risk. Mr. Kovaleski should explain that variable universal life policies A. Offer a guaranteed death benefit with no investment risk. B. Have a fixed premium amount and a guaranteed cash value growth rate. C. Cash value accumulation is linked to the performance of underlying investment options, introducing investment risk. D. Behave similarly to term life insurance policies with a focus on pure risk protection. The correct answer is C. Cash value accumulation is linked to the performance of underlying investment options, introducing investment risk. Variable Universal Life Insurance, VUL, is a type of life insurance that combines a death benefit with a cash value accumulation component. Unlike whole life insurance with a guaranteed cash value growth rate, VUL policies link the cash value to the performance of underlying investment options chosen by the policyholder. This introduces investment risk, as the cash value can fluctuate based on market performance. Mr. Kovaleski should explain the potential benefits and risks associated with VUL policies to ensure the client understands the investment component. Question 73. A health insurance company is developing a new Preferred Provider Organization (PPO) plan in New York. According to New York state regulations, which of the following statements is most likely true regarding financial incentives for using in-network providers? A. PPO plans cannot offer any financial incentives to encourage the use of in-network providers. B. Financial incentives for in-network providers must be equal to the out-of-network benefits. C. PPO plans have flexibility in designing financial incentives to promote the use of in-network providers. D. There are no specific regulations regarding financial incentives in PPO plans under New York law. The correct answer is C. PPO plans have flexibility in designing financial incentives to promote the use of in-network providers. PPO plans offer flexibility in choosing providers, with in-network providers typically offering lower out-of-pocket costs for the insured. New York state regulations allow PPO plans to design financial incentives, such as lower copayments and deductibles, to encourage the use of in-network providers. This helps control plan costs and promotes efficient healthcare delivery. Question 74. Ms. Rodriguez is a resident of New York and is considering purchasing a long-term care insurance policy. According to New York state regulations, which of the following statements is most accurate regarding mandated benefits in long-term care insurance policies? A. Carriers must offer policies that cover home health care services only. B. Carriers must provide coverage for institutional care in a nursing facility with no benefit limits. C. Carriers are required to include benefits for both home health care and nursing facility care, but they can set daily or lifetime maximums. Correct. D. There are no mandated benefits in New York for long-term care insurance policies. The correct answer is C. Carriers are required to include benefits for both home health care and nursing facility care, but they can set daily or lifetime maximums. New York State mandates that long-term care insurance policies offered within the state must include coverage for both home health care services and nursing facility care. However, carriers are allowed to set daily or lifetime maximum benefit amounts for each type of care. This regulation ensures a baseline level of coverage for policyholders while allowing insurers some flexibility in product design and pricing. The correct answer is C. Withdrawals up to the total amount of premiums paid are tax-free. Amounts exceeding that are taxed as income. Withdrawals from a universal life insurance policy in New York follow specific tax rules. Money withdrawn up to the total amount of premiums paid is generally considered a return of principal and is not taxed. However, withdrawals exceeding the total premium amount are typically treated as taxable income. It's important for Mr. Cohen to clarify that this is a general guideline, and the client should consult with a tax advisor for personalized advice regarding their specific situation. Question 76. Mr. Ramirez is a resident of New York and is considering purchasing a long-term care insurance policy. He is concerned about the potential for premium increases in the future. Which of the following statements is most accurate regarding premium increases for long-term care insurance policies in New York? A. Insurers in New York are prohibited from raising premiums for long-term care insurance policies once issued. B. Insurers in New York can only raise premiums for long-term care insurance policies based on age and health status. C. Insurers in New York must offer guaranteed renewable long-term care insurance policies with level premiums. D. Insurers in New York can raise premiums for long-term care insurance policies based on justified reasons, with prior approval from the New York Department of Financial Services. The correct answer is D. Insurers in New York can raise premiums for long-term care insurance policies based on justified reasons, with prior approval from the New York Department of Financial Services. Guaranteed renewable long-term care insurance policies are not mandatory in New York. However, under New York Insurance Law Section 4604(b), insurers can only increase premiums for these policies with prior approval from the New York Department of Financial Services, DFS. The DFS will only approve rate increases based on justified reasons, such as unexpected claim experience or changes in mortality tables. Question 77. Ms. Lee is a licensed life insurance agent in New York and wants to sell accident and health insurance. Which of the following statements is true regarding the licensing requirements in New York? A. Ms. Lee only needs her life insurance license to sell accident and health insurance. B. Ms. Lee must pass a separate accident and health insurance licensing exam in addition to her life insurance license. C. Ms. Lee can sell accident and health insurance under her life insurance license as long as the policy is limited to accidental death benefits. D. There are no additional licensing requirements for accident and health insurance if Ms. Lee already holds a life insurance license in New York. The correct answer is B. Ms. Lee must pass a separate accident and health insurance licensing exam in addition to her life insurance license. In New York, a separate accident and health insurance license is required to sell accident and health insurance products. Holding a life insurance license does not qualify Ms. Lee to sell accident and health insurance. She needs to pass the specific accident and health insurance licensing exam administered by the New York Department of Financial Services, DFS. Question 78. A group health insurance policy issued in New York State requires guaranteed issue to all eligible employees. An employee with a pre-existing medical condition applies for coverage under the plan. The employer can A. Deny coverage to the employee due to the pre-existing medical condition. B. Charge the employee with a pre-existing condition a higher premium compared to other employees. C. Impose a waiting period on the employee before coverage for the pre-existing condition takes effect. D. None of the above. The correct answer is D. None of the above. New York State mandates guaranteed issue for group health insurance plans. This means that employers cannot deny coverage to employees or their dependents based on health status. Additionally, they cannot charge higher premiums or impose waiting periods for pre-existing conditions. Question 79. A life insurance policy issued in New York includes a viatical settlement provision. The policyholder is terminally ill and wants to sell the policy to a viatical settlement company. Under New York State regulations, which of the following statements is most accurate regarding the viatical settlement process? A. The viatical settlement company must obtain the insured's written consent before purchasing the policy. B. The viatical settlement company can pay the policyholder any amount they agree upon, regardless of the policy's death benefit. C. The viatical settlement process is not regulated by New York State. D. Viatical settlements are prohibited for life insurance policies issued in New York. The correct answer is A. The viatical settlement company must obtain the insured's written consent before purchasing the policy. Viatical settlements are allowed in New York State, but they are subject to specific regulations. New York Insurance Law Article 78 requires viatical settlement companies to be licensed and outlines the disclosure requirements for the viatical settlement process. One key requirement is that the insured must provide written consent before the viatical settlement company can purchase the policy. Question 80. A health insurance policy issued in New York State offers coverage for mental health services. Which of the following statements is true regarding mental health parity under New York law? A. The health insurance plan can impose a higher annual or lifetime dollar limit on mental health benefits compared to other covered benefits. B. The health insurance plan can require greater patient cost sharing for mental health services, such as higher copayments or deductibles. C. Mental health benefits must be equal in scope and duration to medical, surgical benefits offered under the plan. D. There are no mental health parity requirements for health insurance plans in New York. The correct answer is C. Mental health benefits must be equal in scope and duration to medical, surgical benefits offered under the plan. New York State adheres to the Mental Health Parity and Addiction Equity Act, MHPAEA, which requires parity between mental health and medical, surgical benefits in group health plans. This means that the health insurance plan cannot impose more restrictive benefit limitations on mental health services compared to other covered benefits. Question 81. Ms. Hernandez is a resident of New York and is considering a Medicare supplement policy, Medigap, to fill the gaps in her original Medicare coverage. She is concerned about replacing her current doctor if she switches to a Medigap plan. Under New York State regulations, which of the following statements is true regarding access to providers with Medigap plans? A. Medigap plans in New York can restrict access to specific doctors or hospitals within the Medicare network. B. Medigap plans must allow Ms. Hernandez to continue seeing her current doctor as long as the doctor accepts Medicare. C. Ms. Hernandez should contact her current doctor to confirm if they accept all Medigap plans. D. Both A and C are true. The correct answer is B. Medigap plans must allow Ms. Hernandez to continue seeing her current doctor as long as the doctor accepts Medicare. Medigap plans in New York cannot restrict access to providers within the Medicare network. As long as Ms. Hernandez's current doctor accepts Medicare, she can continue seeing them even after enrolling in a Medigap plan. However, it's always a good practice to confirm with the doctor's office to ensure they participate with all Medigap plans. D. Question 82. Mr. Jackson is a resident of New York and wants to purchase a variable universal life insurance policy. He understands that these policies offer investment growth potential alongside a death benefit. He is concerned about the fees associated with variable universal life insurance. According to New York insurance regulations, which of the following statements is most accurate regarding these fees? A. Variable universal life insurance policies in New York cannot have any surrender charges. B. The insurance company must disclose all applicable fees associated with the variable universal life policy in detail. C. There is a maximum allowable surrender charge for variable universal life insurance policies in New York. D. Variable universal life insurance policies cannot have sales charges. The correct answer is B. The insurance company must disclose all applicable fees associated with the variable universal life policy in detail. New York insurance law requires insurance companies to provide detailed information about all charges and fees associated with a variable universal life insurance policy. This includes surrender charges, expense charges, and sales charges. While there's no maximum limit on surrender charges, insurers must disclose them clearly. Question 83. A health insurance issuer in New York offers individual health insurance plans. The issuer wants to implement a mandatory mail-order pharmacy benefit for prescription drugs. Under New York State regulations, which of the following statements is true regarding mail-order pharmacy requirements? A. The health insurance issuer can require members to use mail-order exclusively for all prescriptions. B. The health insurance issuer cannot offer mail-order pharmacy as a benefit option. It must be included in all plans. C. If a mail-order pharmacy benefit is offered, members must be allowed to choose between mail-order and retail pharmacies for their prescriptions. D. Mail-order pharmacy benefits cannot be offered in individual health insurance plans in New York. The correct answer is C. If a mail-order pharmacy benefit is offered, members must be allowed to choose between mail-order and retail pharmacies for their prescriptions. New York insurance law allows health insurance issuers to offer mail-order pharmacy benefits, but they cannot mandate their use. Members enrolled in plans with a mail-order pharmacy benefit should have the option to choose between mail-order and retail pharmacies to fill their prescriptions. Question 84. A consumer in New York inquires about a long-term care insurance policy from a licensed agent. During the sales process, the agent should disclose which of the following statements regarding long-term care insurance benefits. A. Long-term care insurance benefits will automatically increase to keep pace with inflation. B. The policyholder will be guaranteed to receive all the benefits outlined in the long-term care insurance policy regardless of the cost of care. C. Long-term care insurance benefits may not cover all the costs associated with long-term care services. D. Most long-term care insurance policies have a cash value component that grows over time. The correct answer is C. Long-term care insurance benefits may not cover all the costs associated with long-term care services. It's crucial for agents selling long-term care insurance in New York to be transparent about benefit limitations. While long-term care insurance can help offset costs, it may not cover all expenses. Options A, B, and D might not be true for all policies, and agents should not make misleading statements. Question 85. A group health insurance plan offered by a New York employer covers preventive care services. An employee inquires about the coverage for mammograms. According to the New York State Preventive Maintenance Services mandate, which of the following statements is most accurate regarding coverage for mammograms? A. The plan can deny coverage for mammograms if the employee has no symptoms or family history of breast cancer. B. The plan must cover mammograms at no cost to the employee, following the recommended screening schedule set by the U.S. Preventive Services Task Force, USPSTF. C. The plan can require the employee to meet a deductible before coverage for mammograms takes effect. D. Mammograms are not considered preventive care services under the New York State Preventive Maintenance Services mandate. The correct answer is B. The plan must cover mammograms at no cost to the employee, following the recommended screening schedule set by the U.S. Preventive Services Task Force, USPSTF. The New York State Preventive Maintenance Services mandate requires group health insurance plans to cover certain preventive care services without any cost sharing, deductible, copay, coinsurance for the employee. Mammograms, following the USPSTF guidelines, are included in this mandate. Question 86. A life insurance agent in New York is explaining replacement of life insurance policies to a client. According to New York insurance regulations, which of the following statements is most accurate regarding replacement activities? A. The agent can replace an existing life insurance policy without informing the current insurer. B. A written notice informing the policyholder of their right to cancel the replacement policy within 30 days must be provided. C. The agent cannot replace an existing life insurance policy unless the client can demonstrate a financial hardship for keeping the old policy. D. Replacement of life insurance is prohibited in New York State. The correct answer is B. A written notice informing the policyholder of their right to cancel the replacement policy within 30 days must be provided. Replacement of life insurance is allowed in New York. However, agents have specific disclosure requirements. New York Insurance Law Section 213 requires a written notice informing the policyholder of their right to cancel the replacement policy and receive a full refund of premium within 30 days. Question 87. A health insurance issuer in New York offers individual and employer-sponsored health insurance plans. The issuer wants to develop a new network of healthcare providers. Under New York State regulations, which of the following statements is true regarding network adequacy standards? A. The issuer can design their provider network with limited access to specialists in certain geographic areas. B. New York State does not have any specific network adequacy standards for health insurance plans. C. The issuer must ensure their network has a sufficient number and variety of providers to meet the needs of enrollees within a reasonable service area. D. The issuer can require long referral wait times to see specialists within their network. The correct answer is C. The issuer must ensure their network has a sufficient number and variety of providers to meet the needs of enrollees within a reasonable service area. New York insurance law mandates that health insurance issuers offering network plans must demonstrate network adequacy. This means the network should have a sufficient number and variety of providers, primary care physicians, specialists, hospitals, within a reasonable service area to meet the anticipated needs of enrollees for covered services in a timely manner. Options A and D would not comply with network adequacy standards. Question 88. A consumer in New York is considering a Medicare Advantage (MA) plan offered by a private insurance company. They are concerned about the plan's ability to change benefits or premiums during the year. According to New York State and federal regulations, which of the following statements is true regarding changes to MA plans? A. MA plans can modify benefits and premiums at any time during the contract year. B. MA plans cannot change benefits or premiums throughout the year, but they can do so at renewal. C. Changes to benefits and premiums require approval from the Centers for Medicare and Medicaid Services, CMS, and notification to enrollees. D. MA plans cannot change benefits but can adjust premiums based on individual health status. The correct answer is C. Changes to benefits and premiums require approval from the Centers for Medicare and Medicaid Services, CMS, and notification to enrollees. Federal regulations govern MA plans, and changes to benefits or premiums require approval from CMS. Enrollees must be notified of any approved changes before they go into effect. Options A and D violate CMS regulations. Question 89. A health insurance agent in New York is contacted by a potential client who recently moved to the state from California. The client has a pre-existing medical condition and is concerned about obtaining health insurance coverage. Under the Affordable Care Act, ACA, guaranteed issue provisions, which of the following statements is true regarding the client's ability to obtain coverage? A. The client can be denied coverage or charged a higher premium due to their pre-existing condition. B. The client is guaranteed issue for any health insurance plan offered in the state, regardless of the plan design. C. The client is guaranteed issue for qualified health plans offered on the individual health insurance marketplace. D. The client can only obtain coverage through a high-risk pool plan for individuals with pre-existing conditions. The correct answer is C. The client is guaranteed issue for qualified health plans offered on the individual health insurance marketplace. The ACA's guaranteed issue provision prohibits health insurance issuers from denying coverage or charging higher premiums based on pre-existing conditions. In New York, the client is guaranteed issue for qualified health plans offered on the individual exchange. Option D refers to pre-ACA risk pools, which are no longer available. Question 90. A group health insurance plan offered by a New York employer provides coverage for substance use disorder treatment. The plan outlines specific requirements for accessing these benefits, including mandatory participation in outpatient treatment before inpatient coverage is considered. According to New York State Mental Health Parity and Addiction Equity Act, MHPAEA, regulations, can the plan have such a requirement? A. Yes, the plan can require mandatory outpatient treatment before inpatient coverage for substance use disorder is available. B. No. MHPAEA prohibits any restrictions on accessing inpatient treatment for substance use disorder compared to mental health conditions. C. The plan can have this requirement, but the duration of mandatory outpatient treatment cannot exceed a certain limit set by New York State. D. MHPAEA does not apply to substance use disorder treatment benefits offered under group health plans. The correct answer is B. No. MHPAEA prohibits any restrictions on accessing inpatient treatment for substance use disorder compared to mental health conditions. MHPAEA mandates parity between mental health and substance use disorder benefits in group health plans. This means the plan cannot impose stricter requirements for accessing inpatient treatment for substance use disorder compared to mental health conditions. Option B. Options A, C, and D would violate MHPAEA regulations. Question 91. An agent is explaining disability income insurance to a client in New York. The client inquires about the difference between own occupation and any occupation disability benefits. Which of the following statements accurately describes the difference? A. Own occupation benefits continue only if the disability prevents the insured from working in their specific occupation, while any occupation benefits pay as long as the insured cannot work in any occupation for which they are qualified. B. Own occupation benefits are more expensive than any occupation benefits because they have stricter requirements for benefit payments. C. Both own occupation and any occupation benefits have the same definition of disability, but any occupation benefits typically have a longer benefit period. D. There is no difference. Own occupation and any occupation disability benefits are the same. The correct answer is A. Own occupation benefits continue only if the disability prevents the insured from working in their specific occupation, while any occupation benefits pay as long as the insured cannot work in any occupation for which they are qualified. Own occupation disability benefits are more restrictive but offer broader coverage. They continue to pay benefits as long as the disability prevents the insured from working in their specific occupation, even if they could perform the duties of another occupation. Any occupation disability benefits are less restrictive but have narrower coverage. They typically pay benefits only if the insured cannot work in any occupation for which they are reasonably qualified, even if it's a different occupation from their own. Question 92. A consumer in New York is considering a critical illness insurance policy. They understand the policy covers certain critical illnesses but are unsure about the claims process. According to New York insurance regulations, which of the following statements is most accurate regarding the claims process for critical illness insurance? A. The insurance company has complete discretion to decide whether a critical illness meets the policy definition. B. The policy definition of a covered critical illness must be clear and unambiguous, and the insurer cannot deny claims based on technicalities. C. The consumer must notify the insurer within a specific timeframe after diagnosis, but there is no requirement to submit medical records during the claim process. D. The consumer has the right to appeal a denied claim, but the appeal process is not mandated by New York State regulations. The correct answer is B. The policy definition of a covered critical illness must be clear and unambiguous, and the insurer cannot deny claims based on technicalities. New York insurance law requires critical illness insurance policies to have clear and unambiguous definitions of covered conditions. The insurer cannot deny claims based on technicalities if the illness meets the policy definition. B. Consumers have the right to submit medical records and appeal denied claims, although the specific appeal process might be outlined in the policy. Question 93. A health insurance issuer in New York offers individual and group health insurance plans. The issuer wants to implement a tiered network design with different benefit levels based on the chosen network. Under New York State regulations, which of the following statements is true regarding tiered network designs? A. The issuer can significantly restrict benefits for out-of-network coverage compared to in-network coverage. B. Tiered network designs are prohibited in New York for all health insurance plans. C. The issuer can offer tiered networks, but the benefits for all tiers, in-network and out-of-network, must meet minimum standards set by New York State. D. Tiered networks are allowed, but the out-of-network benefits must be identical to the in-network benefits. The correct answer is C. The issuer can offer tiered networks, but the benefits for all tiers, in-network and out-of-network, must meet minimum standards set by New York State. Tiered networks are allowed in New York for both individual and group health plans. However, issuers must ensure that benefits for all tiers, in-network and out-of-network, meet minimum standards set by New York State to maintain access to quality care. C. Option D wouldn't incentivize using the in-network providers, and A and B could limit consumer choice and access. Question 94. A resident of New York is considering a long-term care insurance policy. They are concerned about the possibility of premium increases in the future. According to New York insurance regulations, which of the following statements is true regarding premium increases for guaranteed renewable long-term care insurance policies? A. Premiums can only be increased based on the policyholder's age. B. Premiums can be increased based on inflation and justified reasons with prior approval from the New York Department of Financial Services, DFS. C. Premiums are guaranteed to remain level throughout the entire policy term. D. The insurance company can increase premiums at any time with written notice to the policyholder. The correct answer is B. Premiums can be increased based on inflation and justified reasons with prior approval from the New York Department of Financial Services, DFS. While guaranteed renewable long-term care insurance policies offer lifetime coverage, the premiums can be adjusted under certain circumstances. In New York, insurers can request premium increases based on inflation and other justified reasons, but they need prior approval from the DFS. B. Option C is not always true, and options A and D violate regulations. Question 95. A life insurance agent in New York is contacted by a potential client interested in purchasing a policy for their grandchild. According to New York insurance law, which of the following statements is true regarding insurable interest in life insurance policies for minors? A. Only parents or legal guardians have an insurable interest in a minor child's life. B. Anyone can purchase a life insurance policy on a minor child, regardless of their relationship. C. Grandparents can purchase a life insurance policy on their grandchild, but the benefit amount cannot exceed the minor's reasonable funeral and burial expenses. D. A minor child cannot be named as the insured on a life insurance policy. The correct answer is A. Only parents or legal guardians have an insurable interest in a minor child's life. In New York, only someone with an insurable interest can purchase a life insurance policy on another person's life. An insurable interest means a person would suffer a financial loss upon the death of the insured. Generally, only parents or legal guardians have an insurable interest in a minor child's life. A. Option B is incorrect, and options C and D might be allowed under specific circumstances with proper insurable interest documentation. Question 96. A health insurance plan offered by a New York employer covers mental health services. An employee inquires about the confidentiality of their mental health records. According to the Federal Health Insurance Portability and Accountability Act, HIPAA, regulations, which of the following statements is true regarding the privacy of mental health information? A. The health plan can share the employee's mental health records with their employer without their consent. B. The employee can request a restriction on how their mental health information is disclosed, but the health plan is not obligated to comply. C. The health plan can only disclose mental health information for treatment, payment, or healthcare operations without written consent. D. HIPAA privacy rules do not apply to mental health information disclosed within a group health plan. The correct answer is C. The health plan can only disclose mental health information for treatment, payment, or healthcare operations without written consent. HIPAA privacy rules protect the confidentiality of individually identifiable health information, including mental health records. The health plan can only disclose this information for treatment, payment, or healthcare operations without the employee's written consent. C. Options A, B, and D violate HIPAA regulations. Question 97. Mr. Ramirez is a resident of New York and is considering purchasing a long-term care insurance policy. He is concerned about the potential for costs exceeding his policy limits. According to New York regulations, which of the following statements is most accurate regarding long-term care insurance benefits? A. Once a policy's benefits are exhausted, Mr. Ramirez will be responsible for all additional costs. B. New York mandates inflation protection riders on all long-term care policies, automatically increasing benefits to keep pace with rising costs. C. Mr. Ramirez can purchase a guaranteed issue policy with lifetime benefits, ensuring coverage regardless of his health condition. D. Some long-term care policies offer optional benefit extensions that may provide additional coverage after the initial benefits are depleted. The correct answer is D. Some long-term care policies offer optional benefit extensions that may provide additional coverage after the initial benefits are depleted. While option A might seem intuitive, New York requires long-term care insurers to offer optional benefit extensions for a specified period after the initial policy benefits are used. This helps mitigate the risk of out-of-pocket expenses exceeding coverage limits. Question 98. Ms. Lee is a life insurance agent licensed in New York. A client interested in a universal life policy asks about the flexibility of premium payments. Ms. Lee should explain that under New York regulations, universal life policies A. Require a minimum guaranteed premium payment regardless of the policy's cash value. B. Allow premium payments to be skipped entirely as long as the policy has sufficient cash value. C. Offer a grace period for missed premiums, but if unpaid, the policy will lapse. D. Provide premium flexibility, with minimum payments based on the desired death benefit and cash value accumulation. The correct answer is D. Provide premium flexibility, with minimum payments based on the desired death benefit and cash value accumulation. Universal life insurance in New York offers flexibility in premium payments. While there might be minimum payments to maintain the desired death benefit and cash value accumulation, unlike option A, these can be adjusted based on the policyholder's needs and the policy's cash value. Option B is not entirely accurate. However, missing premium payments altogether can lead to policy lapse. Option C is partially true. Question 99. A New York resident is replacing a group health insurance plan with an individual health insurance policy. They are concerned about pre-existing condition exclusions. According to the New York Health Act, which of the following statements is true regarding pre-existing conditions and individual health insurance coverage? A. Insurers can deny coverage or impose rating penalties based on pre-existing conditions. B. Insurers are prohibited from denying coverage or charging higher premiums due to pre-existing conditions. C. An individual health insurance policy may exclude specific pre-existing conditions, but these exclusions must be clearly disclosed. D. There is a mandatory waiting period before pre-existing conditions are covered under individual health insurance plans in New York. The correct answer is B. Insurers are prohibited from denying coverage or charging higher premiums due to pre-existing conditions. The New York Health Act prohibits health insurers from denying coverage or charging higher premiums based solely on pre-existing conditions. This is a significant consumer protection measure. Option B is the most favorable outcome for the policyholder. There are no exclusions based on pre-existing conditions. Option C is incorrect, and there is no mandatory waiting period for coverage. Option D is not applicable. Question 100. An agent is explaining disability income insurance to a client in New York. Which of the following statements is most accurate regarding the definition of disability under a disability income policy in New York? A. Disability is defined as any illness or injury that prevents the insured from working in any occupation. B. The definition of disability is standardized across all disability income policies in New York. C. Disability is defined based on the insured's inability to perform the duties of their own occupation, with an option for any occupation coverage. D. New York law mandates a specific elimination period before benefits begin under a disability income policy. The correct answer is C. Disability is defined based on the insured's inability to perform the duties of their own occupation, with an option for any occupation coverage. Disability income insurance in New York typically defines disability based on the insured's inability to perform the substantial duties of their regular occupation, own occupation. Option C offers the most relevant definition. Some policies may offer an any occupation rider for broader coverage, but this is not mandatory. While there might be a mandatory elimination period before benefits begin, option D is partially true. The specific timeframe can vary by policy. Question 101. A life insurance agent is contacted by a client concerned about the beneficiary designations on their policy. The client's spouse recently passed away, and they want to ensure their adult child receives the death benefit. According to New York insurance regulations, which of the following statements is most accurate regarding beneficiary designations? A. Beneficiary designations are irrevocable and cannot be changed without the original beneficiary's consent. B. The policyholder can change the beneficiary designation at any time, as long as it's done in writing and received by the insurer. C. In the absence of a designated beneficiary, the death benefit will automatically pass through the policyholder's will. D. If the primary beneficiary predeceases the insured, a contingent beneficiary automatically becomes the sole recipient of the death benefit. The correct answer is B. The policyholder can change the beneficiary designation at any time, as long as it's done in writing and received by the insurer. In New York, policyholders generally have the right to change their beneficiary designation at any time. Option B provides the most flexibility. This should be done in writing and submitted to the insurer for proper documentation. Option A is not entirely accurate, and the death benefit won't necessarily pass through the will. Option C is not guaranteed. While contingent beneficiaries can receive the death benefit if the primary beneficiary predeceases the insured, option D is partially true. The specific order of payout depends on the policy's designation details. Question 102. A New York resident is considering a Medicare supplement policy, Medigap, to help cover out-of-pocket costs associated with original Medicare. They are concerned about guaranteed availability of these policies. According to New York regulations, which of the following statements is true regarding guaranteed issuance of Medigap policies? A. Guaranteed issuance is only available during a specific enrollment window, regardless of the applicant's health status. B. Insurers are required to offer all standardized Medigap plans to any Medicare beneficiary residing in New York. C. An applicant's health can be a factor in determining eligibility for a Medigap policy in New York. D. Guaranteed issuance applies only to new Medicare enrollees and doesn't apply to those already covered by original Medicare. The correct answer is B. Insurers are required to offer all standardized Medigap plans to any Medicare beneficiary residing in New York. New York adheres to federal Medigap regulations, which mandate guaranteed issuance for standardized Medigap plans to any Medicare beneficiary residing in the state, regardless of their health status. Option B highlights this consumer protection. This means insurers cannot deny or adjust premiums based on pre-existing conditions. Option A partially refers to the Medigap open enrollment period, but it doesn't restrict availability outside that window. While an applicant's health cannot be a factor in guaranteed issuance, option C is incorrect. There might be other eligibility requirements. Option D is not accurate as guaranteed issuance applies to all Medicare beneficiaries. Question 103. Ms. Rodriguez is a life insurance agent in New York and wants to sell a policy to Mr. Garcia. According to New York insurance law, which of the following statements is most accurate regarding replacement of Mr. Garcia's existing life insurance policy? A. Ms. Rodriguez does not need to provide Mr. Garcia with a written notice of his right to return the new policy and receive a full refund of premium within 30 days. B. Ms. Rodriguez can only replace Mr. Garcia's existing policy if the new policy offers a guaranteed lower premium. C. Ms. Rodriguez must obtain written documentation from Mr. Garcia demonstrating his financial need for the increased coverage provided by the new policy. D. Ms. Rodriguez must provide Mr. Garcia with a written disclosure explaining the benefits and drawbacks of replacing his existing policy. The correct answer is D. Ms. Rodriguez must provide Mr. Garcia with a written disclosure explaining the benefits and drawbacks of replacing his existing policy. New York insurance law requires life insurance agents to follow strict replacement guidelines to ensure consumers are making informed decisions. Section 213 of the New York insurance law dictates that agents replacing existing life insurance policies must provide a written disclosure outlining the benefits and drawbacks of the new policy compared to the existing one. This disclosure empowers consumers to understand the potential impact of replacing a policy and allows them to make informed choices. Question 104. A health insurance company in New York State denies a claim for long-term care benefits to Mr. Smith because of a pre-existing condition. Mr. Smith believes this denial is unfair. According to New York regulations, what recourse does Mr. Smith most likely have? A. Immediately file a lawsuit against the health insurance company. B. File an appeal with the New York State Department of Financial Services, DFS. C. Contact his employer to request intervention from the company's HR department. D. Resubmit the claim with additional medical documentation. The correct answer is B. File an appeal with the New York State Department of Financial Services, DFS. In New York, consumers have the right to appeal a health insurance claim denial. The New York State Department of Financial Services, DFS, provides an external review process for such situations. Mr. Smith can file an appeal with the DFS, outlining his case and requesting a review of the claim denial. The DFS will then investigate the situation and make a determination on the validity of the denial. Question 105. An agent is marketing a Medicare supplement policy in New York. During her presentation, she mentions the policy will cover the donut hole in a beneficiary's Medicare Part D prescription drug coverage. According to New York State regulations, which of the following statements is true regarding this marketing approach? A. The agent is prohibited from mentioning the donut hole by name, but can explain the coverage for prescription drug costs beyond the initial coverage phase. B. The agent can freely discuss the donut hole and its implications on a beneficiary's out-of-pocket expenses. C. The agent must disclose that Medicare supplement policies are not mandatory for all Medicare beneficiaries. D. All of the above statements are true. The correct answer is D. All of the above statements are true. New York State regulations allow agents to discuss the donut hole in Medicare Part D prescription drug coverage. This term is widely used and understood by consumers. Agents can explain how a Medicare supplement policy can help beneficiaries manage the out-of-pocket costs associated with the coverage gap. Additionally, agents must disclose that Medicare supplement policies are optional and not mandatory for all beneficiaries. Question 106. An insurance company in New York offers a disability income insurance policy with various benefit periods. According to New York insurance regulations, which of the following statements is most likely incorrect regarding benefit periods for disability income insurance? A. The policy benefit period can be defined as a set time frame during which the insured will receive monthly benefits if disabled. B. New York regulations require a minimum benefit period of 24 months for all disability income insurance policies. C. The insured can choose a benefit period that aligns with their financial needs and income protection goals. D. Some disability income insurance policies may offer benefit periods extending to retirement age. The correct answer is B. New York regulations require a minimum benefit period of 24 months for all disability income insurance policies. New York insurance law does not mandate a minimum benefit period for disability income insurance. While some states have such requirements, New York allows insurers to offer policies with various benefit periods. This provides flexibility for consumers to choose a policy that best suits their needs. Benefit periods can range from a few months to retirement age, depending on the policy design. Question 107. Ms. Chen is a resident of New York and is considering purchasing a long-term care insurance policy. She is concerned about potential premium increases in the future. According to New York regulations, which of the following statements is most accurate regarding premium increases for long-term care insurance policies? A. Insurers in New York are prohibited from raising premiums on long-term care policies once issued. B. Premiums for long-term care insurance policies are guaranteed to remain level throughout the entire policy period. C. Insurers can only raise premiums for long-term care policies with prior approval from the New York State DFS. D. Long-term care insurance policies in New York may be subject to premium increases based on factors outlined in the policy contract. The correct answer is D. Long-term care insurance policies in New York may be subject to premium increases based on factors outlined in the policy contract. Long-term care insurance policies in New York are not guaranteed to have level premiums. Policy contracts typically outline specific conditions under which premium increases may occur. These conditions might include factors like the insured's age, claim experience of the entire policyholder group, or adjustments for inflation. It's crucial for consumers to carefully review the premium provisions within the long-term care insurance policy contract before purchasing. Question 108. A health insurance company in New York offers a network-based health insurance plan, HMO. According to New York insurance regulations, which of the following statements is true regarding covered services under such a plan? A. The insured can visit any out-of-network provider and expect coverage for the entire cost of services. B. The plan covers in-network preventive care services without requiring a deductible or copayment. C. The insured needs a referral from their primary care physician to see any specialist within the network. D. Both B and C are true. The correct answer is D. Both B and C are true. Network-based HMO plans in New York typically require designation of a primary care physician, PCP, who coordinates the insured's care. To see a specialist within the network, the insured usually needs a referral from their PCP. However, a significant advantage of HMO plans is that they often cover preventive care services, like annual checkups and screenings, with no deductible or copayment, encouraging preventive healthcare practices. Question 109. Mr. Lopez is a life insurance agent licensed in New York and wants to sell a variable universal life insurance policy. According to New York insurance law, which of the following statements is most accurate regarding the sale of variable universal life insurance? A. Mr. Lopez can recommend specific investment options within the variable universal life policy without additional qualifications. B. Mr. Lopez must hold a separate securities license to solicit sales of variable universal life insurance products. C. Variable universal life insurance policies are exempt from New York State insurance regulations. D. Mr. Lopez can only sell variable universal life insurance if he works for a specific insurance company. The correct answer is B. Mr. Lopez must hold a separate securities license to solicit sales of variable universal life insurance products. In New York, selling variable universal life insurance requires a life insurance agent to hold a separate securities license in addition to their standard life insurance license. This additional qualification ensures agents selling these products have the necessary knowledge to understand the investment risks associated with variable universal life insurance policies. Variable universal life policies link the death benefit payout to the performance of underlying investment options chosen by the policyholder. Question 110. A health insurance company in New York denies a health insurance application based on pre-existing conditions. The applicant believes this denial is unfair. According to New York regulations and the Affordable Care Act, ACA, which of the following statements is true regarding health insurance application denials based on pre-existing conditions? A. Insurance companies in New York have complete discretion to deny coverage based on any pre-existing condition. B. The ACA prohibits health insurance companies from denying coverage or charging higher premiums due to pre-existing conditions. C. Applicants with pre-existing conditions can only obtain coverage through high-risk insurance pools. D. The applicant can appeal the denial, but the final decision rests solely with the insurance company. The correct answer is B. The ACA prohibits health insurance companies from denying coverage or charging higher premiums due to pre-existing conditions. The Affordable Care Act, ACA, introduced significant reforms regarding health insurance denials based on pre-existing conditions. One key provision prohibits health insurance companies from denying coverage or charging higher premiums due to pre-existing conditions. If an applicant with a pre-existing condition is denied coverage in New York, they have the right to appeal the decision. Question 111. A consumer in New York is considering purchasing a Medicare Advantage (MA) plan. According to New York State regulations, which of the following statements is most accurate regarding Medicare Advantage plans? A. Medicare Advantage plans are a mandatory replacement for traditional Medicare. B. Enrolling in a Medicare Advantage plan automatically cancels an enrollee's Part D prescription drug coverage. C. Medicare Advantage plans often come with additional benefits beyond what traditional Medicare covers, like vision or dental care. D. Consumers must disenroll from traditional Medicare to participate in a Medicare Advantage plan. The correct answer is C. Medicare Advantage plans often come with additional benefits beyond what traditional Medicare covers, like vision or dental care. Medicare Advantage, MA, plans are an alternative option to traditional Medicare offered by private insurance companies approved by Medicare. Enrolling in an MA plan is not mandatory, and consumers can choose between traditional Medicare and an MA plan based on their needs and preferences. One advantage of MA plans is that they often provide additional benefits not covered by traditional Medicare, such as vision, dental, or hearing services. However, it's important to note that some MA plans may require separate enrollment for Part D prescription drug coverage. Question 112. An insurance company in New York issues a group health insurance policy to a company with multiple employees. According to New York insurance law, which of the following statements is true regarding mandated coverage under group health insurance plans? A. The plan must cover all pre-existing conditions for all employees, regardless of their enrollment date. B. The plan is only required to offer coverage to employees who work full-time. C. The plan document dictates which preventive care services are covered, with no state mandates. D. New York mandates coverage for certain preventive care services under group health plans. The correct answer is D. New York mandates coverage for certain preventive care services under group health plans. New York State mandates that group health insurance plans offered by employers cover certain preventive care services. This ensures a baseline level of preventive healthcare access for employees enrolled in these plans. The specific covered services are outlined in state regulations, and the plan document should reflect these requirements. Question 113. A life insurance agent in New York is explaining the concept of insurable interest to a potential client. According to New York insurance law, which of the following statements accurately describes insurable interest? A. An individual has an insurable interest in their own life and can name anyone as a beneficiary. B. A business partner has an insurable interest in the life of their co-owner but cannot be a beneficiary. C. An insurable interest requires a reasonable expectation of financial loss upon the death of the insured. D. Only close family members can have an insurable interest in another person's life. The correct answer is C. An insurable interest requires a reasonable expectation of financial loss upon the death of the insured. The concept of insurable interest is crucial in life insurance. In New York, an individual has an insurable interest in another person's life if they would suffer a financial loss upon that person's death. This demonstrates a legitimate connection and prevents people from profiting from the death of someone with whom they have no such financial stake. For example, a business partner has an insurable interest in their co-owner's life because the death could impact the financial stability of the business. Question 114. A health insurance company in New York offers a health insurance plan with a deductible. According to New York insurance law, which of the following statements is most accurate regarding deductibles? A. The deductible amount is the same for all insured individuals under the plan, regardless of age. B. Health insurance plans in New York cannot impose deductibles on preventive care services. C. The insured is responsible for all covered medical expenses until the deductible is met. D. Deductible amounts cannot exceed a specific limit set by New York State insurance regulations. The correct answer is B. Health insurance plans in New York cannot impose deductibles on preventive care services. New York insurance law prohibits health insurance plans from imposing deductibles on preventive care services mandated by the state. This ensures access to preventive health care without the barrier of a deductible. However, deductibles typically apply to other covered medical expenses. The insured is responsible for paying covered costs until the deductible amount is met, after which the insurance plan kicks in and begins sharing the financial responsibility based on the plan's coinsurance provisions. While there may be industry standards for deductibles, New York does not set a specific limit on deductible amounts within insurance plans. Question 115. A consumer in New York is nearing retirement and considering an annuity product. According to New York State regulations, which of the following statements is true regarding annuity disclosures? A. Annuity salespeople are not required to disclose surrender charges associated with the product. B. Annuity contracts must clearly outline the fees and charges associated with the product. C. Consumers have a limited window to cancel an annuity purchase after receiving the contract. D. Both B and C are true. The correct answer is D. Both B and C are true. New York State regulations require transparency in the sale of annuity products. Annuity contracts must clearly disclose all fees and charges associated with the product, including surrender charges. These charges apply if the policyholder withdraws funds from the annuity before a specified maturity date. Additionally, New York mandates a free look period for annuity purchases. This allows consumers a limited window, typically 10 days, to review the contract and cancel the purchase without penalty if they decide the annuity is not suitable for their needs. Question 116. An agent is marketing a disability income insurance policy in New York. During her presentation, she mentions the policy will pay benefits if the insured becomes disabled due to a back injury. According to New York insurance regulations, which of the following statements is most accurate regarding this marketing approach? A. The agent is prohibited from mentioning specific covered conditions, even common ones like back injuries. B. The agent can freely discuss back injuries, but cannot guarantee coverage for any specific condition. C. The agent must explain the policy's definition of disability, which may not include all types of back injuries. D. Both B and C are true. The correct answer is D. Both B and C are true. While some limitations may exist, New York agents are not necessarily prohibited from mentioning specific conditions like back injuries during disability insurance presentations. However, they must ensure their marketing is truthful and not misleading. It's crucial to clarify that the policy defines disability and that coverage will depend on whether a specific back injury meets that definition. Disability insurance policies typically outline specific criteria for benefit eligibility, and the agent should avoid guaranteeing coverage for any specific condition. Question 117. A health insurance company in New York offers a health insurance plan with a preferred provider network, PPO. According to New York insurance regulations, which of the following statements is true regarding PPO plans? A. PPO plans require designation of a primary care physician, PCP, and referrals to see specialists within the network. B. PPO plans offer the greatest level of coverage with the lowest out-of-pocket costs for insureds. C. Insureds can choose to see out-of-network providers with PPO plans, but typically face higher out-of-pocket costs. D. PPO plans are not subject to New York State insurance regulations. The correct answer is C. Insureds can choose to see out-of-network providers with PPO plans, but typically face higher out-of-pocket costs. Preferred Provider Organization, PPO, plans offer flexibility in choosing providers. Unlike HMO plans that require a PCP and referrals for in-network specialists, PPO plans allow insureds to see in-network or out-of-network providers. However, using in-network providers typically results in lower out-of-pocket costs due to negotiated rates between the insurer and the network providers. While PPO plans offer more freedom than HMO plans, they may come with higher deductibles and coinsurance for out-of-network care compared to in-network services. PPO plans are still subject to New York State insurance regulations. Question 118. According to New York insurance law, which of the following statements is most accurate regarding agent continuing education requirements? A. Life and health insurance agents in New York are exempt from any continuing education requirements. B. Agents must complete a specific number of continuing education (CE) credits every year to maintain their licenses. C. CE courses can be taken online without any approval from the New York State Department of Financial Services, DFS. D. Only new agents are required to complete continuing education courses in their first year of licensure. The correct answer is B. Agents must complete a specific number of continuing education (CE) credits every year to maintain their licenses. New York insurance law mandates continuing education (CE) for life and health insurance agents to ensure they maintain their knowledge and expertise. The New York State Department of Financial Services, DFS, sets specific requirements for the number of CE credits agents must complete periodically to renew their licenses. These CE courses address current insurance topics, regulations, and ethical practices. Agents should ensure their chosen CE courses are approved by the DFS to meet their licensing requirements. Question 119. A health insurance company in New York denies a health insurance claim because the service was considered experimental or investigational. According to New York insurance regulations, which of the following statements is true regarding coverage for such services? A. Health insurance plans in New York are mandated to cover all experimental or investigational treatments. B. The insured can appeal the denial even if the service is deemed experimental or investigational. C. Insurers have complete discretion to deny coverage for any service classified as experimental or investigational. D. Coverage for experimental or investigational treatments requires a separate rider attached to the health insurance policy. The correct answer is C. Insurers have complete discretion to deny coverage for any service classified as experimental or investigational. Health insurance plans in New York are not typically obligated to cover experimental or investigational treatments. These treatments are still under development and lack conclusive evidence of their effectiveness. Insurers have discretion to deny coverage for such services based on their plan provisions. However, the insured has the right to appeal the denial if they believe the service falls under a covered category within their plan. Consumers should carefully review their plan documents to understand coverage limitations regarding experimental or investigational treatments. Separate riders for such coverage are not typical in New York health insurance plans. Question 120. An individual is considering applying for Medicaid in New York. According to New York regulations, which of the following statements is most accurate regarding Medicaid eligibility? A. Only low-income families with children qualify for Medicaid coverage in New York. B. Medicaid is a federal program with uniform eligibility requirements across all states. C. New York State has the authority to establish additional eligibility criteria for Medicaid beyond federal guidelines. D. Individuals can choose between Medicaid and Medicare coverage in New York. The correct answer is C. New York State has the authority to establish additional eligibility criteria for Medicaid beyond federal guidelines. Medicaid is a joint federal and state program that provides health insurance coverage for low-income individuals and families. While Medicaid is a federal program, states have some flexibility in establishing eligibility criteria beyond the federal minimum requirements. This allows states like New York to tailor the program to address specific needs within their population. Income is a significant factor in Medicaid eligibility, but it's not the only one. New York may consider additional factors like age, disability status, and family composition when determining eligibility. Individuals cannot choose between Medicaid and Medicare. Eligibility criteria and program benefits differ between these programs.